Hi, and welcome to our Virtual Uranium Conference. The momentum behind nuclear energy has never been stronger, and every day we see more and more positive headlines reaffirming its importance in creating clean, reliable, and carbon-free energy. The World Bank recently announced its decision to finance nuclear energy projects, having last financed the nuclear project in 1959. In the United States, the government has issued executive orders targeting a fourfold increase in nuclear capacity from 100 gigawatts to 400 gigawatts by 2050. Major tech companies are also signaling confidence in nuclear energy. Both Microsoft and Meta have signaled 20-year power purchase agreements with Constellation Energy. Construction of nuclear reactors continues to grow throughout the world. According to the World Nuclear Association, there are currently 440 reactors operating globally, with another 69 under construction. Annual uranium demand stands at 170 million pounds and will rise to over 300 million pounds by 2040. But this raises a very critical question, and that is, where are we going to get the uranium from? To help answer this question, we've assembled an amazing group of expert speakers who will offer their insights on the ever-changing uranium markets. The conference begins with John Ciampaglia of Sprott Inc., followed by David Cates and Geoff Smith of Denison Mines, Phil Williams of ISO Energy, Ben Finegold of Oceanwall, Colin Healey of Premier American Uranium, Justin Huhn of Uranium Insider, John Cash of Energy, Jander of WMC, and we conclude with Dastan Kosherbayev of Kazatomprom. Don't forget to subscribe to our channel, Bloor Street Capital, and also hit that notification button so you can be kept up to date on upcoming events. We have some amazing content coming out in the coming weeks. And if you don't want to watch us, follow us on Spotify and Apple Podcasts. Thank you very much for your support, and I hope you enjoy the conference. John, thank you very much for joining us today. It seems like every time we get together, there's significant events happening in the nuclear energy sector or the uranium market. And I think you would agree with me when I say the biggest events we've seen thus far have been the raises you and your team have done for the Sprott Physical Uranium Trust, $25.55 million in the month of May, and more recently, $200 million. Maybe you can start the conversation by just telling us what was the rationale for these raises.
Yeah, sure. Great to be back, Jimmy. And uranium, once again, is very topical. I guess I'd first start off by saying that, the uranium price, has had corrected pretty significantly. And we viewed that as a unsustainable sell-off. We just didn't think that the fundamentals supported a spot price that was in the mid-60s. So we were really anxious to try to figure out how to capitalize on that and take advantage of that price dislocation. And I think a lot of our shareholders as well were very frustrated that the price, had drifted down as low as $63 when we started the year at about 73. So there was a real disconnect. And obviously it was not about fundamentals, it was about sentiment. And it was a lot about noise in the marketplace related to everything from tariffs to trade wars, risk off appetite, et cetera, et cetera. So we really thought the market was providing an opportunity to take advantage of. And one of the factors that I think really galvanized our drive to raise money was, there was this increasing chatter that we were hearing from our contacts that some hedge funds were taking short positions against many of the stocks in the sector, as well as the Uranium Trust itself. And the thesis that they were sharing amongst themselves with respect to the Uranium Trust was that, and I'm going to repeat this verbatim as it was relayed to me, that on July the 8th, Sprott was going to run out of cash, be forced to sell uranium in the market, and really kind of spook the market and reaffirm this idea that our pounds are mobile. And that feedback came to us in May, and we just thought, isn't that kind of silly that someone's going to take a short position in a vehicle that has very compelling fundamentals on that simple idea? And so we went to work right away to socialize this idea about doing a non-broker private placement. We reached out to a handful of, let's say, very long-term committed uranium bulls that I think understood the industry dynamics incredibly well and knew how kind of silly this investment thesis was. And they helped us basically cash up the vehicle, as you mentioned, about $25 million. Sprott also participated in that financing. And that was really just to shore up our balance sheet to make that whole narrative go away. And so that, I think, kind of perked a lot of interest in the industry because we had never done a capital raise in that fashion. So it was important for us to shore up the balance sheet, but it was even more important to demonstrate to the marketplace that we had more tools in our kit here in terms of managing the vehicle. So that was very important. And then obviously just a week or so ago, we followed up with the bought deal financing that we did with Canaccord. And we were extremely pleased with the response we got on the back of that capital raise where, we initially agreed to a $100 million bought deal. And within 12 hours of that, the deal had upsized to $200 million, which I think is an incredibly strong signal and a vote of confidence in the vehicle, as well as confidence that institutional investors that participated feel as though the spot price right now represents very good value. And I'll give you a little bit of color on who participated. It was about 30% SPUT existing shareholders, about 20% of the shareholders, the participants, I should say, were shareholders of other Sprott vehicles, like, for example, our Gold Trust, or were shareholders of our parent company, Sprott Inc. And half of the participants we had no relationship with, to our knowledge, have not been invested in any of our vehicles. So really good vote of confidence from the existing shareholders. But then, half of the institutions that participated, and there were about 40 altogether, were somehow involved in uranium, but not directly with us, and stepped up to help us get this financing done. So really, really happy. The response we've got has been overwhelming. We've just had a flood of inbounds from institutional investors applauding us for doing this. And we're obviously trying to take advantage of this by buying uranium right now.
It's interesting to see so many new players step into the space. Now, I'm curious about the jurisdiction. Can you speak to that? Were they Americans, Europeans, Asians?
Yeah, I would say it was very well represented in Australia. That was probably the largest sector. And I think for good reason. If you look at some of the short interest amongst some of the Australian listed stocks, they are sky high. They are coming down somewhat, but they're very elevated. So there's been, I think, a real battle in Australia and some of these uranium names around, between bulls and bears. The balance was obviously North American with some European participation, but very good participation from Australia overall.
And so now that you're sitting on over $200 million, do you want to speak at all to the strategy?
Yeah, well, our strategy is not changed one bit. We raise capital and we selectively go into the market to buy more U3O8. Thus far, we've purchased 650,000 pounds with the proceeds. We have not bought any uranium since late last year. So it was a bit of a discovery process to get a sense of the marketplace and to get a feel for, how much material is out there. And we're just, in the early days of this process. So, our goal is to buy uranium. That's what the use of proceeds related to the raise are all about. And obviously we have cash on our balance sheet to pay for the G&A for about a year. So we feel like we're in really good shape. We are coming into a seasonally slow period with summer, but I have a feeling it's not going to be like traditional summers because this has not been a traditional year so far, year to date. And many participants, I'd say, have been paralyzed with a lot of uncertainty and have been distracted with a lot of noise in the marketplace and have just not really come to market to buy. And I mean, when you look at UX Consulting's year-to-date term market contracting levels, it's at 26 million pounds year-to-date. That is about 1/3 the run rate of replacement rate. So that signals to us that utilities have not been buying uranium thus far this year. They were a little bit light last year, and this is all leading to a lot of pent-up demand in the pipeline, in our opinion. So this could be a very interesting summer where the market I think is going to be much more active relative to other summers where the uranium market tends to go into a bit of a quiet period.
Yeah, and the key word you just threw out there is uncertainty. And we've seen this time and time again here in the last few months with companies reporting Q1 and Q2 numbers globally. And people are just saying people are paralyzed and they're not spending as much, they're not traveling as much because of this uncertainty we have associated with the trade wars and tariffs, etc. So I want to ask you about the other Sprott products, and we talked about the Sprott Physical Uranium Trust. What sort of interest are you getting into the ETFs, the Sprott Uranium Miners ETF, and also the Sprott Junior Miners ETF?
Yeah, well, obviously the uranium equities were kind of following the spot price lower. And, from January 1st to around April the 7th, we had a pretty significant correction amongst the uranium stocks. And, we were down about 30% over that period of time. So it was very frustrating to investors that, remained very bullish and constructive, medium to long term, that all of this negative sentiment was pulling down the sector, even though this is a sector that has highly inelastic demand and that we know utilities, if they delay and defer, are just going to have to buy more later in the future. Now, it's been very positive since April the 7th, which is, I think, when the stocks bottomed, that first of all, tariffs were largely not applied to uranium. So that was a real lift in sentiment. And since that period in April, I think we've had 11 consecutive weeks of gains in the uranium mining stocks, which is really great. I think they're up about 60% over that period of time. So we've had a very sharp V-shaped recovery. They're still up modestly for the year, even with that big spike up. But, there's clearly, I think, a lot of people sitting on the sidelines. The Sprott uranium mining ETFs in North America have raised about $50 million of new capital year to date. Some of the competitor funds are experiencing pretty significant outflows still. So people have been kind of selling into the strength. And we've also seen a bit of a trend where people are moving into more of the downstream part of the nuclear, energy and fuel supply chain. The small modular reactor stocks have been real high flyers. And I think that has definitely attracted some capital into some of those companies. But generally we're not seeing big flows of capital, even though the returns over the last couple of months have been very strong.
Yes, and I would echo your sentiments. I'm surprised to see some of the moves that we've seen in these equities. Cameco's done quite well this year. I believe it's up 25 to 30% on the year. Some of the utilities, Constellation, Duke are doing well, but a lot of the developers and a lot of the explorers are relatively quiet. And to your point, there's a lot of interest in these, what I would call secondary names or maybe meme stocks. Some of the moves are dramatic, up 100, 200%.
Yeah, and obviously, those things kind of ebb and flow. There was a period not too long ago where some of those stocks were really washed out, and there seems to be an incredible amount of excitement right now, people chasing some of those stories. I think the prospects for those companies look very interesting, medium long term, as they get their technologies approved and deployed. But not everyone's going to be a winner there. There are going to be winners and losers, obviously. And the market's, obviously trying to figure out who's best positioned to deploy their technologies in the coming years.
So you and your team are always on the road marketing, and I'm curious to hear what investors are saying. Are people asking you a lot about the uranium products, or is there still a lot of focus in gold?
I think people are looking at uranium as something that is better insulated against all the noise and economic recessionary risks and concerns, given it's a product that can't be substituted, it can't be thrifted. We absolutely need it to generate about 10% of global electricity. And obviously the electricity demands are just going up globally. So I think their fundamental interest in uranium is clearly there. Is a lot of the hot money kind of washed out? Absolutely. I think it's long gone. I think you have more fundamental investors right now that are in the sector. Clearly, it feels like some retail investors have kind of come and gone, which is expected in any bull market. I think people kind of get washed out because the sector can be very volatile short term, but that's not unexpected. Many of these bull markets that can last years will have multiple short-term corrections that are pretty meaningful, and that's I think the challenge around maintaining your conviction when the fundamentals look great, but sentiment and flows in the short term can have an impact on the performance.
Yes, one thing we've learned in the last few years is that you have to be very patient when it comes to investing in uranium equities.
I think that it goes for all commodities. If I go back in time and I think about the 2000s and the gold bull market, and obviously Eric Sprott was a huge advocate and early proponent of investing in gold. There were, a lot of people get to, talk about its run from the 200s per ounce up to 1900, but it wasn't straight up. There were multiple 20, 30, 40% corrections along the way, even though, it had that overall huge gain. So I think it's common with all commodities. You get a lot of these kind of violent corrections that can happen very quickly. They settle down and they kind of resume. Now, obviously, you need strong fundamentals. And in uranium, we can't point to one data point that says the fundamentals are worse now than they were 6 months ago when the price of uranium was at 73. So, that's obviously what we're focused on is fundamentals. But in the short term, sentiment obviously can have a really outsized effect on in returns and flows.
John, as we wrap up, what message would you like to convey to investors? And maybe you can also touch on what news events you think will be significant in the coming months as we head into year end.
Yeah, well, I would say that people are generally very fundamentally constructive on uranium. Yes, there have been some pockets of hedge funds that have been shorting some of the names. Not really sure what their investment thesis is there. The other message I'd like to pass is, a lot of people have said to us, we're really bullish, but what's the next catalyst going to be? And it's really hard to predict catalysts in this sector, but we know they always come. And I'd like to think that our recent capital raises on the Uranium Trust represent catalysts that the market just wasn't anticipating. And they're obviously having their desired effects in terms of helping to improve sentiment. And we're not going to stop innovating. This is a very important franchise for us at Sprott. We like to think of ourselves as very innovative, and I think these last two financings clearly demonstrate that. Second thing I would mention is, we're coming up to WNA in September in London, which I know you will be there, and we will be there with our team as well, marketing. And every 2 years, they put out a new demand forecast for uranium. And if I go back to September of 2023, that acted as a really interesting catalyst to get the uranium market going because it was a meaningful increase in expectations around demand between now and 2050. We would expect they're going to put out another forecast in September that illustrates another, tangible lift in demand, given all of these reactors that are getting life extensions, all of the planned reactors that you're hearing. New York State just, the other day said they want to add nuclear capacity after closing one of their nuclear power stations in 2021. And they're going to start to build in that, these expectations, the hyperscalers, SMRs. Our bet is that it's going to act as another positive catalyst when the market digests, the incremental demand that is building in the system. And at the same time, while we've had a lot of brownfield, restarts of existing mines, we really haven't had any greenfields, come online yet. And that is proving to be more challenging than I think everybody would like to see. So the supply, I think, side of the equation has been improving, but it's got its challenges. And the demand picture, I think, continues to grow. So that's something we're going to be looking out for. and that's not too far away. So I think that's potentially a big catalyst in the hopper for early September.
Well, John, I want to thank you very much for spending time with us today and sharing your thoughts. And congrats on the recent raises. And I look forward to seeing you in London.
Yeah, thanks very much. Always good to chat, and I think this conference is really well timed given the renewed interest in uranium.
Once again, thank you.
A global stage for the leaders, thinkers, and pioneers of nuclear energy. 5 decades turning plans into progress. Today, we face new challenges and even greater opportunity to meet the world's demand for clean, reliable, abundant energy. We must build faster, collaborate wider, and act bolder. This year, we're opening the doors even wider to new voices, new partners, and new conversations. Symposium 50. The decisions made here set the agenda for the future of the global nuclear industry. Together, energizing ideas, energizing leadership, energizing action, energizing the future. Now.
David and Geoff, thank you so much for joining us today. It's good to see you both. I want to provide a bit of a framework on where I want to take our discussion in the next few minutes. And David, with you, I want to discuss the latest news regarding construction and production at Phoenix. And Geoff, with you, I want to discuss the commercialization opportunities for Denison. And David, my first question is for you. You and your team have 2 key meetings coming up with government officials at the Canadian Nuclear Safety Commission. Tell us exactly when these meetings will be and what's the purpose of them.
Yeah, Jimmy, first of all, thanks very much for having us back on. We really enjoy this platform, and you're right. We do have some major developments coming up with permitting for our Phoenix project. It's been a long road to get here. Years of work on technical de-risking from our engineering operations team and also our regulatory team. And while the upcoming meetings are important, I always like to emphasize that we've been blessed with an excellent project, and that's what's allowed us to make so much headway over the last several years before the uranium market even improved. And just recently, we were recognized again by the Mining Journal as being the #1 non-precious metals mine development project in the world. So a great accolade for us, and certainly helps our team through these years of regulatory approvals to remember why we're doing all of it. So to get to your question, look, we were very successful late last year, completing the final stages of the technical review of our environmental assessment with the Canadian Nuclear Safety Commission. And so in completing that, we essentially flipped the page on the regulatory process from one of reviewing the merits of the project and the environmental assessment analysis to one where the staff of the Canadian Nuclear Safety Commission are now prepared to recommend approval of the project. And that put us into this final stage of the federal approval process, which is a public hearing. Our dates for the public hearing, it's broken up into 2 parts, are scheduled in October of 2025 and December of 2025. And so these will be the first hearings for a new mine, a uranium mine by the CNSC in quite some time. And with that, we're now working towards finalizing the materials for the hearings. And essentially what people can expect is that Denison will be advocating the merits of the project. CNSC staff will be explaining all the rigorous analysis that they've done and their conclusions that support a recommendation for approval. And then the public will be able to intervene both on a positive and probably negative in some voices way on the project. And a panel of commission members from the Canadian Nuclear Safety Commission will hear all of this and then work to make a decision that is in the interest of Canadians.
And how long does each meeting last?
Well, we're expecting, a 1-day meeting for that October, and then depending on the number of parties that have expressed an interest in interventions, the commission is allowed for several days for the second part, but it may not be several days. It'll depend on the number of contributors. And then from there, the commission will take time to review the materials before they render a decision.
And that decision is expected when?
Well, the commission has a service standard that they try to achieve. For a hearing like this, we're expecting a decision within about a 90-day period after. So that would put us into Q1 of 2026. And if we had a positive decision within that window, then we would be looking to make a final investment decision and commence construction as quickly as possible. So potentially construction commencing as early as Q1 2026.
So if construction starts in late Q1 or early Q2 of 26, when can we expect production?
Yeah, we have approximately a 2-year construction timeline on the project, and that's really notable. It's owing to our different mining method. So Phoenix is being brought forward as an in situ recovery mine, and so that means we don't have the mega sort of infrastructure efforts associated with like opening a pit or sinking a shaft. And so we're around 2 years construction timeline. CapEx, in that range of $400 to $500 million. Again, not a mega project. And so if we take that sort of schedule of Q1 or end of Q1 2026 for FID and construction commencement, add roughly 2 years, we're targeting mid 2028 for first production. And that likely positions us as the first new large-scale uranium mine in the region in approximately 20 years since Cigar Lake started up.
And when Phoenix is up and running, what will be the annual production?
Yeah, Phoenix has a 10-year mine life that averages around 6 million pounds a year. So not the largest mine in the industry, but certainly a meaningful one, top 10 territory. We will produce more pounds in the first 5 years than the average, and we'll produce a few pounds less than the average in the second 5 years. So something that looks more like 7 to 9 million pounds in the first half, and more like 3 to 5 million pounds in the second half.
Geoff, I want to turn the conversation to you now. The CapEx at Phoenix will be over $400 million. How will you fund this?
We have an incredibly strong balance sheet consisting of cash, physical uranium, and investments. As of March 31, the physical uranium on balance sheet of 2.2 million pounds had a value of just over 200 million Canadian. But importantly, that was based on a $64.45 uranium price. So where we sit today, that's moved up materially. And so our balance sheets continue to strengthen. But importantly, as we think about bringing all the financing together, it's important what we don't have, and that's existing debt on the balance sheet. And David mentioned Phoenix as being an incredible project, but it has a number of important credit positives that lenders have really gravitated towards, that being the low cost, CapEx, OpEx, the short construction, and a rapid payback. So all of those really lend itself well to supporting credit, and we really view credit as providing the majority of the capital for the construction. So we're continuing to advance on work streams related to that. And then when we think about it holistically, we're not aware of another mine that's as well positioned or as well funded at a pre-permit stage in the uranium sector, certainly, and really across the entire mining spectrum. We think Denison and Phoenix really stand out.
And Geoff, the CapEx of $419 million, that came out from the feasibility study in 2023. We've had a little bit of inflation. Then do you expect an increase at all in that number?
Yeah, I mean, as we're going through our long lead procurement and advancing on detailed design and engineering, we're continuing to refine all parts of our capital plan. But importantly, it is a recent feasibility study, so we haven't seen a massive wave of inflation.
And another responsibility that falls under your job position is commercialization. Why don't you speak to some of the strategies that you and your team will employ in the coming months?
Yeah, thanks, Jimmy. We like to take a very much Denison-centric approach. We hear about homes for pounds or volume-based pricing, but we really take a asset-based and phased approach. And what that means, first and foremost, from a phased perspective, is project financing. I mentioned we have the physical uranium, 2.2 million pounds. We really view that as a core component of our project financing plan. So today we're prioritizing discussions with offtake partners and utilities where we can place our current physical uranium into long-term contracts during the construction period, such that we can monetize the physical along the same timelines that we're deploying capital for the build. Importantly as well, what's different about Denison from some other developers is we have our McLean North production starting up in 2025. So really the offering we have when we're interfacing with utilities is threefold: current inventory, McLean North production, and the flagship Phoenix production coming in 2028.
And Geoff, how will Denison's strategy for selling pounds be different from your competitors like NextGen or Cameco?
Yeah, thanks. We take an asset-based approach, recognizing that Phoenix is low cost, low capex. It really does afford it a greater degree of ability to handle market exposure in terms of pricing. And so certainly market-related contracts are something we're pursuing, but also recognizing the size we are in the market, where we're not going to be the largest contract in many books, but certainly still a meaningful contract. That allows us to add some layers of fixed prices in addition to the market-related contracts we have, and really with the focus on trying to identify what's most valuable to our customers and take that customer-centric approach.
And so because of your size or your smaller size compared to these other players, you're going to be a lot more flexible in terms of your pricing.
Well, we think we can be nimble and really take a customer view. We'll be, I think, large enough that we'll have a key role within contract books, but also not be a dominant position that require, call it, more rigidity in terms of contract structure.
David, another asset I want to discuss is the McLean Lake mine. Geoff did touch on this, but that's a JV you have with Orano. Orano is the operator, and it's set to go into production later in 2025. Can you give us an update on this?
Yeah, Jimmy, it's an incredibly exciting time for our McLean Lake joint venture. Been very well known for many years for operating the McLean Mill, which is processing all the ore from the Cigar Lake mine. But before it was doing that, McLean was a mining joint venture. And so we're back in mining this year. We will be producing in the second half of the year using our patented joint venture-owned Sabre mining method. So this is surface access, borehole, resource extraction, which means that we're mining without going underground, but we are excavating rock. And so the tool is able to excavate a cylindrical-like cavity from surface, pull up the cuttings, and then we're able to handle those and send them to the McLean Mill for processing. And, you know, this is a novel mining method, but it's one that we've tested successfully at a commercial scale at McLean Lake previously. And so we've got all the equipment on hand. There's very little capex to get this operation going because we have all the gear. It's just been about a year of mine development work and expecting to be producing later this year. And that should be meaningful for us. We do have 22.5% of the production that'll come to our account, and we'll be able to market that independently of Orano. And as Geoff says, be able to sell it to our customers.
So Denison through the JV with Orano will be the next uranium producer in the basin.
The next new mine is happening right now at McLean North. We like to advertise Phoenix as the next new large-scale mine just because it's so much more meaningful to global supply than we'd see out of McLean North.
And David, you have two primary assets. We already spoke about Phoenix, but your other one is Griffin. And I know a lot of your attention right now is focused on Phoenix just because it's much further along, much more advanced. But Griffin will also be very significant when it's up and running. Maybe you can just speak to the timeline associated with this, the construction and also the production of Griffin, and what will it mean in terms of production?
Yeah, Jimmy, you're absolutely right to look beyond Phoenix. And I can tell you that the management team, we've had to start doing that because we know the timelines for these types of projects. And we are absolutely laser focused on executing on Phoenix. But as our teams have grown, we have teams that are skilled in different things. And so it has given us the capacity to start looking at the development pipeline. We are very careful around managing our capital for this. But if we want to have the cash flow from Phoenix fund the development of Griffin, then we do need to have Griffin in the queue. And so you'd see in our budget for this year, we do have some new spending at Griffin. The project is at a pre-feasibility study level, so it does require additional de-risking for us to be able to move forward and bring it to a feasibility study level, which would be the next technical de-risking step. And then from there, we would be looking to make a decision on whether we would advance into detailed engineering and whatnot, as well as the permitting to be able to have the project come online. And look, no decision has been made on this, but ultimately what we're assessing now is the potential for it to be able to come into construction during Phoenix's life so that those cash flows from Phoenix can fund the CapEx. Now, Griffin is an underground mine. It's not in the same geologic setting as Phoenix, and so the CapEx is more significant. It's more in the range of $800 million, which is easily funded by Phoenix cash flow, which is a great pairing for us. In operation, you're looking at around 7 to 9 million pounds a year and another 6 to 7 years of mine life. So really would be a significant extension for Wheeler River to be able to have Griffin come online subsequent to the startup of Phoenix.
So we discussed Phoenix, Griffin, and also McLean Lake mine. Now you also have a large portfolio of other exploration and development projects. Are there any assets in there that you would like to speak about, or any assets that you're working on this summer?
Yeah, absolutely. Our company has a long history, and so we do have an excellent portfolio of projects that we've built up. Maybe I'll call out a few things. Number one is our Midwest joint venture with Orano. This is a project located quite close to McLean Lake. We've been studying Midwest for both saber mining and ISR mining. We are nearing completion of a PEA for Midwest as an ISR mine, which would be the first public disclosure of economics for Midwest as an ISR mine. We're very optimistic about that. We've also been studying and advancing our work at Waterbury Lake, where we have the Teheldeth-Tway or THT deposit. And our partners there are also our largest shareholder in Denison, which is KHNP from South Korea. That project has the potential to be upgraded to a PFS this year. And then maybe just to round it out, going back to exploration, we have an excellent portfolio of what I call domestic exploration properties right in Denison. But we're very excited about our partnerships that we've put together, our collaborations with two more junior companies in our sector, where we've taken non-core Denison exploration properties and basically vended them in to a company called Foremost Clean Energy, which trades on the NASDAQ as FMST. They've got a portfolio of 10 projects where they are earning in up to 70%, and we own the residual of those projects, so let's say a 30% interest, but we're also Foremost's largest shareholder. Similar formula with a company called Kosa Resources, trade on the TSXV as COSA. They've acquired 3 properties from us at 70%. We retain 30%, and we are Kosa's largest shareholder. These are properties that we were unlikely to explore over the next 3 to 5 years, but that really deserve exploration. And by having Foremost and Kosa work them, we're really trying to amplify our exposure to exploration success. Our focus is on projects, domestic exploration, again, is on projects that are closer to our core assets. So things around the Wheeler River corridor or closer to McLean Lake and Waterbury. But there is quite an exciting exploration story that's evolving in our company as well.
And David, the properties that Foremost and Corsa own, those are all uranium properties situated within the basin?
The projects that we've vended to them, all uranium. Both companies are focused on uranium Athabasca exploration. And, I think they've both got different attributes. Kosa has a number of former Denison staff that are running the company, and Foremost is unique in that it's listed on the NASDAQ. And, DNN, our US ticker on the NYSE American, has incredible volumes. There's certainly a great cross-promotion potential with Foremost on the US market as well.
Geoff, I want to bring it back to you. We have a new Prime Minister in Canada, Mark Carney, and there's been a lot of talk recently of expediting the whole permitting process. Can you speak to this?
Yeah, sure. Well, it's one that's obviously evolving. We're encouraged by the initial indications that there is a desire to cut red tape. And there's certainly a degree of redundancy that happens between both the federal and provincial processes. So I think anything that can be done to streamline and avoid that duplication is going to be beneficial for the entire resource sector, especially those in the critical minerals like ourselves. How that ultimately plays out is obviously still to be determined. But I think importantly, as a multi-asset producer, whether there's imminent change that can affect Phoenix, given it's already well advanced during the permitting process, perhaps less so. But I think for the rest of the portfolio that slots in behind Phoenix, I think that's where the greater opportunity likely lies. But certainly as a low-cost, imminent producer, and one that's expected to not only start construction, but also complete construction during the current term of the administration. We think this would be a great win to show that how the new government really can accelerate development in a responsible way.
David, as we wrap up, you have already provided a lot of detail on what investors can expect in terms of news flow in the coming months. But I think the big takeaway from our conversation is that Denison will be the next uranium producer in the Athabasca Basin, first with the JV with Orano, which is going to be sometime in 2025, followed by Denison's Phoenix project in 2028. Is there anything you would like to add?
No, Jimmy, I think that's a great summary, and maybe I would just take a minute to recognize all the hard work from our team in Saskatoon and Toronto and even in Elliott Lake to get us to this point. I mean, you of course would remember where we've come from in this sector. We went through many very challenging years, and because of the quality of our projects, we've been able to advance to a place where today we can confidently say we are very close to returning to production and becoming quite a meaningful producer again. And that didn't happen on its own. It happened owing to the hard work of a lot of people. So we're very grateful for the effort that people put in, and we're very grateful to be able to offer our investors such an exciting way to participate in the nuclear energy and the uranium sector.
Well said. And I think we can't forget about Saskatchewan being one of the best mining jurisdictions in the world.
We absolutely love doing business in Saskatchewan. We have incredible support from the province, and it also has provided us with many great employees and people who have been motivated to use what they call Saskatchewan ingenuity to move our projects forward. So we absolutely love the jurisdiction.
Well, David and Geoff, that was a great overview, and I want to thank you both very much for spending time with us today and giving us an update at Denison.
Oh, thanks very much, Jimmy.
Phil, thank you very much for joining us today. How are things in Toronto?
Things are great, James. It's starting to get hot, feeling like summer, and looks like the uranium market's on a bit of a heater as well.
Yes, it's good to see. So it's been interesting to watch ISO Energy and how it's evolved in the last few years. At one time, the company was strictly focused on the Athabasca Basin in Canada, but now you have operations also in the US and Australia. And I want to start our discussion focusing on your Canadian operations. You have 14 properties or assets in the basin, but the most advanced one is the Hurricane deposit. It has a resource of 48.6 million pounds, a grade of 34.5%. And many times when we hear these numbers, Phil, we don't fully understand them. And I want you to provide a little bit of context on these numbers and how significant they are.
Yeah, sure. And you're entirely right. It's very significant. Hurricane is in fact the highest grade uranium resource in the world. And at 34.5%, to put it in context, the global resource average grade for uranium is less than 0.1%. So 34.5 versus less than 0.1. So it's not even an order of magnitude bigger. It's a step function bigger. But keep in mind, though, that the Athabasca Basin, where it's located, this is the highest grade place in the world to find uranium, and the existing mines are operating at very high grades. But even relative to the existing mines, Hurricane stands out. For example, Cigar Lake, a mine that's in operation today, is at 17%. So it's twice the grade of what's one of the highest grade mines in the world today.
And I think the other thing we should really focus on, like this is only a very small area. You have a 10-kilometer strike, is that correct?
Yeah, that's right. I mean, look, the deposit itself is unique on the grade, but we're really just getting started. And our Laroque East project, which is host to Hurricane, has 10 kilometers of prospective conductive corridor. And the way that these unconformity style deposits form typically is what's called pearls on a string. And what we mean by that, you picture a string of pearls where you have one pearl and then nothing and then another pearl, et cetera, and on you go. That's the way these deposits form. And to go back to the Cigar Lake analogy, which is a good analogy, it's the same kind of deposit, unconformity style hosted. Cigar Lake forms as a series of pods of mineralization along the conductor corridor. Today at Hurricane, we have one pod. So, and then we have 10 kilometers of prospective strike that could host additional pods of mineralization. And so, we're really excited to start testing further afield from Hurricane and see if we can find, again, those additional pods of mineralization and grow the resource.
So the idea is, so right now you have one pod, as you refer to it, is 50 million pounds, but what you want is another one with another 50, and then you keep adding to that. So you go from 50 to 100 to 150.
Yeah, look, that would be ideal. And when again to go back to the Cigar Lake analogy, they're each pod is not necessarily the same. You can have bigger pods and smaller pods, and let's be clear, the pod that Hurricane is in and is remarkable and very, very significant in its own right. So finding another one is would obviously be first prize, but it's not guaranteed. But finding smaller pods, let's say we find 5, 10, 15, 20 million pound pods could be extremely viable, particularly because if you build a mine around Hurricane, bringing those additional resources in along strike becomes economic because you've already sunk the capital and built that facility.
And one other point I want to mention on Hurricane is that this is only part of the ore body. The other side is owned by Cameco and Orano, and it's called Dawn Lake. Maybe you can talk about that a little bit.
Sure, correct, correct. And the story of the history of discovery of this deposit really involves making the discovery, drilling off the ore body, and as we were drilling off the ore body, we were getting closer and closer to the property border, and that's the border that you mentioned between ourselves and the Dawn Lake joint venture of Cameco and Orano. And by the time we got to the border, we were actually in the best part of the resource, and it clearly continues across the border, and we know that because we can see it in maps, but also because of the level of activity that's happening across the border by Cameco and Orano. They are drilling extensively on their side of the border. They've not yet put out a resource, but they have put out sort of nuggets of information in different disclosure, whether it's on conference calls or in MD&A, telling the market that they are hitting the same kind of mineralization that we have on our side of the deposit. Again, we don't know yet how much they have, but we think based on what we can see standing on our side of the border and looking at the drill patterns and the number of drills that they put in, that they have at least what we have on our side. And this is why I was saying this is a significant resource. If we have, call it 50 million pounds, and they have at least 50 million pounds at 100 million pounds at this grade. And by the way, in this location, at this depth from surface, there's a very good chance that this is a mine in the future.
And that's a good point. How many pounds would you typically need to start a mine in the basin?
I mean, look, there's not one number, and it really comes down to the various characteristics that I outlined. So it's depth from surface, it's where it's located relative to infrastructure. And that's an important point about this project. So we're on the eastern side of the Athabasca. We're where all the existing mines are, all the infrastructures, the roads, the power lines, etc. Hurricane itself is located 40 kilometers away from an existing operating uranium mill, the McLean Lake Mill. And so what that means is that lowers the threshold in terms of what it takes to build a new mine. If you were thinking about what the size of a resource would be required to build a mine in the middle of nowhere, it's not the same as what's required when you're right in the heart of the infrastructure. So I would hazard, and we haven't done the work on the economics yet on the project, but I would hazard that right around 100 million pounds is the level that would support a new mine at this project.
So we talked about many of the benefits. It's in the eastern part of the basin. It's close to infrastructure. You got the grade. Now you just got to keep building on the size. So why don't we talk about the exploration? You did some drilling this past winter, 17 holes. How were they?
Yeah, they were great. Really very encouraging. And what we did in that program was sort of two things. We were looking at exploration on two scales. One scale was immediately on strike from the known resource, so right around Hurricane, and we drilled 13 of those holes around Hurricane. 5 of them hit significantly elevated radioactivity, the kind of radioactivity that we see in the resource itself, on strike outside of the resource envelope to the east on our 100% owned property. So we were extremely encouraged by that. And they were on 2 trends. We have what's known as the main trend and the south trend. We had those types of results on both trends, and we're going to follow up on those areas this summer. We've started drilling already, and we'll be going again. And then the second level of exploration that we did was more regionally. So we talk about this 10-kilometer strike length. We've spent the last couple of seasons really sort of elevating different target areas within that. 10 kilometers is a big area. You don't just drill wildcats. So you have to do work to zero in on where those prospective areas are. We've found a number of areas that we think are quite prospective. We drilled one of them with 3 holes in this past winter. And one of those holes, again, hit significantly elevated radioactivity, the kind of radioactivity that we see in the resource at Hurricane. And this actually ranks as the best hole that we've drilled outside of Hurricane across the entire property. It's 2.8 kilometers away. It's in an area that we call Area D, and we're going to be following up there as well in the current summer program.
So why don't we talk about your summer program? How many meters, how many rigs do you have planned?
Yeah, so in total in the Athabasca, we're planning 11,000 meters. Right now, we've split that between the La Rockies property where Hurricane is and a second project that we have called Hawk. But we're starting at La Rock, of course, because of Hurricane. So we have one rig there right now. Our second rig is coming. Our initial mobilization into the project had been impacted by the forest fires in Saskatchewan. Those are starting to abate, and we're starting to open up some of the roads and the infrastructure that we need to get the camp fully open. That's all happening right now, and we expect to have 2 rigs turning very soon on the property. Again, we'll drill 7,600 meters there to start, but we're very flexible in the way we do our programs. And the great thing about uranium versus some other commodities when you're exploring is you know exactly what you have in the hole when you pull the hole out. What you do when you pull a hole is you run a handheld spectrometer over top of the core. That tells you if you have radioactivity. You follow up with a probe down the hole, also confirming that radioactivity, and that can inform your drill program on the fly. So if you have positive result in one hole and you weren't planning to drill right beside it immediately or in the program, you can change your program on the fly. So we could be doing more meters. We're still planning a total of 11,000. We could do all of those meters at La Rock, assuming we have positive results, again, with 2 rigs that'll be there very, very soon.
And I believe the depth at Hurricane is 350 meters on average. How does that compare to Area D?
Yeah, so it's 325 meters at Hurricane. Area D is more shallow, and it's a good point. As we go east on our property and over that 10 kilometers of trend that we have, the depth to the unconformity, which is the target horizon, shallow. So from the 325 at Hurricane to the far other end of the property, it's actually shallows to 175 meters. At Area D, it's about 275 meters.
So a lot happening in the basin. I want to move on now and talk about some of your U.S. operations. And you have 3 past producing mines in the state of Utah. Tony M is the most advanced. You're doing a lot of work there to moving toward production. Maybe you can just tell us some of the work you're doing.
Yeah, sure. And I think the important thing to highlight when we start talking about our Utah projects is it's a very unique portfolio of projects relative to some other companies that the watchers might be familiar with, in that these are past producing mines. And what that means is and not to oversimplify, but what it means is that ore has been taken out of these mines and turned into yellowcake and sold to utilities in the past. So these are very well-known ore bodies in terms of how they work and that they can actually produce yellowcake in a reliable fashion. But the other implication is that the infrastructure for these projects is already there. So it's very low capital cost to move these mines back into production. And for the first time in over a decade, we opened up Tony M, and you can see some pictures and some videos on our website. We're actually underground. There's 18 miles of underground development, meaning that you can go into the ore body, access faces of ore immediately for mining purposes. And it's a bit different than some of our peers who are starting to build new mines and there's a lot of capital, of course, associated with building a new mine. That's not the case for us. And again, just to highlight, the difference, I think, between this project, our projects, and some other projects. So now what we're doing is we're seeing what's happening in the market. The market is getting stronger. The requirement for domestic U.S. uranium production is real, and it's only going to increase as we go forward. And so we want to have this mine ready to turn back into production very, very quickly to respond to the market when it needs that material. And so we're doing a number of things this summer, including various technical studies, looking at optimizing mining, optimizing processing, optimizing trucking, lowering costs on a per pound basis, so that when we're ready to push the button, we have as I said, an optimized project. And the results of those programs will come out over the course of the summer here, and then we'll be ready to make a production decision later on in the year. And again, the third piece to this, or the other piece that's quite unique about the way we're situated in Utah, again, versus some of the peers, and they all have great attributes and things going on for them. But we importantly have a toll milling agreement signed with a company called Energy Fuels. And Energy Fuels is a producer of uranium today. They have the only licensed and operable conventional uranium mill in the United States working today producing uranium. We have an agreement with them where they will take our ore and process it on our behalf and give us back the uranium so we can sell it into the market or directly to utilities, however we see fit. But again, we're unique in that regard. We're the only company that has such an agreement signed with Energy Fuels today.
And you said you want to push Tonium into production relatively quickly, or do the work required that will put into production relatively quickly. But can that happen this year, or are we looking at 2026?
Look, it could happen this year. I mean, again, the great thing about Tony M is we're fully permitted, the mine's built, the infrastructure's there, the capex is behind us. So if we wanted to, we could take ore out of the operation today. But again, what we'd like to do is get the results from the technical studies that we're doing, feed them all into an economic study and a mine plan, and then be ready to make that decision towards the back half of the year. Of course, market conditions will sort of dictate whether will also be part of dictating whether we make the positive decision to turn production back on or not. But of course, we're very, very positive about where the market's going, and we think actually that timing will dovetail nicely with where uranium and uranium prices are going to be, and in the second half of the year.
So I want to talk about valuation now in your portfolio, because you have a large portfolio of assets, both in the exploration and also development stage. And I'm sure there's a lot of options, a lot of assets in there that are call options. Maybe you can just speak to some of the ones that you're most excited about and that can really add a lot of value to the stock price.
Yeah, for sure. And I think where you're going with this, and where we think about ourselves is we look at the value of the company, and we think about what Hurricane is worth and what our mines in Utah are worth, and we think that even on the basis of those assets, there's upside for the company on that, just based on those assets. But hidden behind those projects, we have, again, what you aptly call call options. We have some projects that are very significant projects in their own right, very large resources, very high grade resources that for one reason or another historically have had impediments to development. And this is not uncommon in uranium. Uranium is a very difficult mineral to bring forward into mines. It's not there's jurisdictions that have gone in and out of favor for uranium, and we happen to have two of them in our portfolio that on their own would be company making assets. But because of these historical impediments, we were able to acquire them for very, very low costs. And so now we're working on uncovering those impediments. And the two projects specifically are the Coles Hill project in Virginia in the United States. This project is the largest uranium resource in the country, bar none. And it's larger by 2 or 3 times than the next largest resource that's known about today. The challenge with Coles Hill is there isn't a uranium mining code in Virginia. So technically, we cannot move this project ahead today into operations, but we're getting a lot of good indications that the potential to overturn that effective moratorium on uranium mining in Virginia and put those regulations in place. There's a lot of impetus behind doing that, particularly with some of the things we mentioned previously about the U.S. being the largest uranium consumer in the world, looking to bring domestic production online. There's no project in the country that can deliver the number of pounds per annum that Coles Hill can. And so we're starting to get a lot of support from the different administrations, both federally and in the state, for moving this project ahead. And so we're doing work in the background to help support those the groups that are interested in helping to see this project move ahead. And we think we could surface quite a lot of value from for the company if we can make some progress on that project. And so it's pretty exciting times to be in the U.S. with the largest uranium project at Coles Hill. And then the second call option is the Matoush project in Quebec. Again, this is a project that was a company maker in the sort of uranium bull market of 06, 07, 08. It's a very high grade project. It's almost 1%, and again, not relative to the Athabasca Basin, but as far as the rest of the world goes, it's one of the highest grade projects outside of the Athabasca Basin. It's a decent sized resource at almost 30 million pounds. But here, there's been a historical impediment with getting social license and acceptability by the local First Nations. And we're working on that right now. So we're developing our relationships in the community. We do have very strong relationships with First Nations in Saskatchewan. We have a collaboration agreement signed with the Yethaneni that covers a lot of our projects in the Athabasca, and we have a very good relationship with them. We're trying to build that same relationship in Quebec and unlock that project. So those projects, we think, get very little value in our market cap today. If we're successful in building those relations and getting support for those projects in those jurisdictions, we could unlock tremendous value for shareholders.
I just want to go back and make a point about Virginia. It's interesting that even though they have this moratorium on uranium mining, they're a big producer of nuclear energy.
Well, that's right. And in fact, they're looking to grow their nuclear fleet dramatically. And it's driven largely by data center demand. So one thing that I've learned being in Virginia with this project is that Virginia actually has the largest number of data centers of any jurisdiction in the world. And so it requires a tremendous amount of power, of course, and they have ambitious plans to grow the number of data centers in Northern Virginia by 50% or even 100% by some estimates. And so it requires a lot more power. A number of the giant tech companies have already talked openly about bringing new data centers to Virginia and supporting more nuclear power, whether it's large scale reactors or small modular reactors. It's all coming to Virginia. So here you have a state that is pro-nuclear, requires uranium on an annual basis, and has the largest largest resource in the country. I think the table is set for making a big push here and hopefully ultimately moving the project ahead.
And has there been any discussion at all from the state about opening or removing this moratorium?
Yeah, look, we're in ongoing conversations with various levels of government, whether it's federal or state, on that front. And I think what they're looking for is a group that can shepherd this project forward in a safe, reliable fashion and generate significant benefit to the state. And I think that we're being recognized as that kind of group, the group that could do that. I mean, we're a very well-financed business. We have very strong shareholders behind us, and a team of experts who have done this time and time again in the uranium space. So we have a significant amount of credibility when we go into those meetings, and it's starting to show in the kind of support that we're getting.
So, Phil, I want to move on now and talk about your balance sheet. You recently did a raise for $50 million. What is use of proceeds?
Yeah, so look, the use of proceeds is largely for the United States, and really the capital raising is opportunistic in the sense that we see the future being in the United States. We're well funded for our Canadian exploration. So all of the drilling that we talked about in the Athabasca Basin, we raised $20 million of flow through earlier this year that's earmarked specifically for that. But what we wanted to do here with this more recent capital raising is accelerate our plans in the US. So all of that work that we're talking about at Tony M and potentially opening it up, that's funded with this fundraising. On top of that, and maybe on a future call we can talk in more detail because we haven't made these plans public yet, but we have big exploration potential on our properties in the United States, and you can. And what I would say about that is these are projects that have been known about for a long time. The resources are in place, but there's low-hanging fruit for exploration that just hasn't been looked at in decades, quite frankly. So we've got a plan together, a team together, ready to move forward on those exploration plans. And again, so use of proceeds is really to drive our U.S. operations forward, technical studies, bulk sample at Tony, exploration programs at all of our projects in the United States. And so I think that it's really going to allow us to sort of turbocharge those assets and have them ready to move forward and ready to deliver results into, again, what we think is going to be a very strong uranium market, particularly in the second half of the year.
And when it came to raising the $50 million, how did it compare to previous years and previous raises? And I'm just trying to gauge the level of interest. And where did the interest come from? What jurisdictions?
Yeah, look, the level of interest was strong. The anchor investor in all of our financings is NextGen. So for watchers that don't know this, NextGen is our largest shareholder. They own about 31.7% of the company today. They're effectively maintaining that interest in this financing, and then the rest of the book was institutional investors all over the world. This is, we're a global story and our investors are global. There's significant appetite for uranium in Australia, for example. Lots of investors came in from there, in Canada, of course, in Europe, and then in the United States. And one of the things that we did recently was we listed the company on the New York Stock Exchange as part of broadening our U.S. investor base. And we had a number of new U.S. investors that came in to this financing on the back of that U.S. listing, and we think that trading liquidity, particularly in the U.S., will pick up over time. Our peers, for example, trade 2 to 3, sometimes larger number of shares in the U.S. versus Canada. So we think that's a big opportunity for our company, particularly because of the nature of our portfolio with such a significant resource base in the United States and a lot of activity going on this year. I think that's a big opportunity for us to gain more U.S. shareholders because, of course, that's the largest pool of capital on the planet.
And when you look at the U.S. market, like in the last year, the last 2 years, do you think there's a lot more interest coming from U.S. investors just in the nuclear and uranium space overall?
Well, 100%. But I will tell you that it's been a roller coaster. So the interest has come in and come out a few times over the last year and a half, mostly in lockstep with uranium prices, which had run up to over $100 and pulled back to below 70 and are now north of 70 again. And so the U.S. market does sort of the when the momentum's there, it piles in, and when the momentum wanes, it sort of piles out. I think it's ready to pile back in. And of course, a lot of it is tied to all of the headlines that we're seeing around the growth of nuclear power, tied to AI, tied to low carbon power and just the growth of nuclear around the world, whether it's large reactors or small modular reactors. It's all happening. The headlines are coming in fast and furious on a weekly basis, and it's alerting these investors to the space. And I think they're coming into the uranium side, but the floodgates will open at some point, particularly if we see a significant prolonged move upwards in the spot price.
Phil, a big part of your strategy has been growing by way of acquisition. Will you continue on with this strategy?
Yeah, look, I think that I have a couple of things to say about that. I think there will be more M&A activity in this space. And we've already seen quite a bit. We've seen, a number of players get together or make acquisitions to get bigger. And it is true that the bigger companies get better valuations, better trading liquidity, better access to capital. And so getting bigger is an important reason of doing M&A. And I think that's at the larger or medium end of this space, there will be more of that happening. What I can tell you is that because of the nature of hurricane and what we talked about earlier on, I think our name is on a lot of people's lists. They see that you can't just go out and find an asset like that. This asset is unique, and it would be a gem in virtually any company's portfolio. So I think our name is in the mix on that front. So when we talk about more merger activity. At the same time, I believe, and I can see it, there's a disconnect in the market between the very small companies and the larger companies in terms of valuations, and there are select single asset companies that have assets that are mispriced in the market, and that's how we've made this business. We've made a history over the last 6 years of buying mispriced assets and then putting our skill set to bear on it, whether that's financial, whether that's technical, whether it's government and community relations. That's what we do. And so I think there are opportunities out there for us, and we're going to pursue them selectively. And if they make sense, we'll absolutely do them. The other part too that we've done successfully, I believe, in the last couple of years is rationalize the portfolio. We do have a lot of projects, and if projects don't look like they're going to fit into that multi-asset producer category, which we would like to become, then we would look to divest some of those non-core assets, again, like we've done historically. And so long answer to a short question, yes, we're going to be very busy on the M&A front going forward, I believe.
Phil, as we wrap up, you've already provided a lot of detail on what you and your team will be working on in the coming months, but maybe you can just summarize for investors what they can expect in terms of news flow in the next couple of months.
Yeah, look, I think it's really it's the tale of two things. It's exploration drilling in Canada, results pending and results coming regularly because of two rigs on our property, one rig on the PurePoint property. And so we'll be very busy delivering those results to the market. And then secondly, in the United States, again, thanks to this recent capital raise, we're going to accelerate our work programs in the US, and it will generate news flow in a number of fronts, whether that's the results from technical studies, economic studies, drill programs, bulk samples, other works that we're doing in the United States. So there will be a very strong cadence to the news flow, sort of back and forth between Canada and the United States over the next 6 to 12 months.
Well, that was a great update, and I want to thank you very much for spending time with us today. Once you determine your plans in the US and how you're going to allocate that $50 million, let me know. I'd love to have you back on again to hear the details. Once again, Phil, thank you.
Yeah, thank you so much. Great chatting as always.
Ben, thank you very much for joining us today. How are things in the great city of London?
Very hot for the first time in a long time, but all good. Thank you.
So London has many great restaurants and a lot of great pubs, and I'm sure you've been to many of them. What's your favorite pub in London?
Wow. I'm gonna go the Chesterfield Mayfair if you're in Central, the Mitre if you're in South, and I also love the Law of the Land. It's a great pub.
Okay, great. We'll have to check out one of those pubs when I come to London here the next couple of months. I don't want to take up too much of your time today. I want to make sure you can hit the pub later on, but because you are located in London, you have a good understanding of how Europeans are looking at nuclear energy and also uranium. And I know with many North American investors that I speak to, there's a high level of frustration with this whole trade because the stocks aren't performing the way they thought they would. And so why don't we just start right here? Tell me, how would you characterize the mood of the European investor right now toward nuclear energy and also uranium?
Yeah, I think the mood of the European investor is not too dissimilar to that of the North American investor, which is we've had continued positive news flow in this sector. But I think what it comes down to is, I guess, when you entered the trade. So if at any point since 2021 you entered the trade at one of its sort of cyclical peaks, then you're sat here quite frustrated, which I understand as well. But if you've been in this trade for sort of 5-6 years, as we have and a lot of our investors have, then you've been playing with house money to an extent for quite a while. But one thing that I do think is pretty consistent across the board is the recognition that this is an amazing or an interesting sector to be invested in at the moment. And I think that the US in particular has been incredibly steadfast in the way it's talked about nuclear, but so has a lot of European countries, and we're seeing a lot of restarts, nascent nuclear power programs in Europe as well. But I think the investor sort of sentiment towards this space is very strong. Of course, there's frustration. I think ultimately that comes down to some investors thinking that 2007 was going to be repeated as soon as they entered the trade. I don't necessarily think that's a good thing for this because it can scare off some of the larger institutions. But I think generally, I think that investors have a pretty positive frame of mind towards this sector at the moment.
Yes, I mean, I can't think of another sector that has so many positives behind it than nuclear energy and uranium. And so sometimes I am somewhat dumbfounded as to why we're not seeing more of a move in both the spot market, the long-term market, and also the equities. Now, you and your colleagues, you cover a lot of what I would call non-mining names, I guess infrastructure names. And I want to touch on some of these names because when you look at Cameco, the second largest uranium producer in the world, it's up 25 or 30% on the year, which is okay, trading at or near all-time highs. But many of these other names, Oklo, for example, OKLO, it's up 200% on the year. Lightbridge up 160% on the year. NewScale up 110% on the year. Why are these names up so much more than these traditional mining names?
So I think that there was a rotation towards the power generators. You saw that really in the fourth quarter of last year was when those names started to have really strong runs. And actually, a lot of those names haven't been listed for very long. I think it comes down to a few things. First of all, it's a super concentrated pool of equities that you can invest in the nuclear space. And I think that the our fundamental belief in the uranium trade derives from a fundamental belief in nuclear power. And I think that for us, our initial thesis was we can't pick the best reactor, but we know that all of these reactors run on the same fuel. I think the market's kind of turned away, not away from that now, but I think they understand that there is another way to play the nuclear thesis, which is via these advanced nuclear reactor, the power generators. Now, these companies had amazing runs, as you mentioned, like the SMR names, Oklo, Uscale, but they're now warranting $10 billion market caps. So I think that's in part due to the promise of these companies signing multi-billion dollar long-term power purchase agreements from 2029, 2030 onwards. But I think it's also a function of things like liquidity, where in the uranium market, the total market cap of the combined equity universe is about $60 billion. So it's very difficult to get institutional size in these names, whereas it's definitely been much easier to get proper size in the power generation names. The liquidity has been much stronger in those names, particularly over the last sort of 6 months.
I wanted to look at the long-term uranium price now, and you recently wrote in one of your notes on the CGN mining and its sales framework agreement, and how it's gone from one focused on spot to now focused on fixed in spot. But you also make mention of the fact that the fixed price component has been reduced from 40% down to 30%. And when I look at that, logically, I would think that would be a negative, but you're saying it's a positive. Maybe you can explain why.
I think that the Chinese have always been pretty advanced in their views towards commodities in general, but particularly nuclear fuel. And I think that recent news out of CGN was really utilities recognizing that long-term supply is in jeopardy. And I think that it's one example, but I think that it's quite a powerful one, whereby it's really the utility giving up that sort of level of power and sort of handing that back to the producers and recognizing that they are going to have to sign contracts, especially longer term contracts at higher prices. So kind of recognizing that early on. But I think more generally in terms of the term market and term prices, it's very, very opaque to get accurate volumes and accurate prices in this market. Today we're selling about $80 a pound. So trading at a sort of $6 premium to spot today. And volumes in the term market this year are coming off an incredibly low base. I mean, we're looking at 25 million pounds contracted in the first 6 months of the year. So, if we carry on at this rate, we're going to be 75% off replacement rate contracting volumes. At some point that has to give. We haven't reached replacement rate for several years. We're talking about well over a decade. And the closest that we got was in 2023, and about 30% of that year was down to one single term contract. But I think utilities have had particularly Western utilities, have had a lot of geopolitical uncertainty to deal with the past 4 years. And hopefully that's starting to become clearer as, regardless of what's going on in the background, governments are pledging billions of dollars, firm commitments towards nuclear power. And for them, for a utility, hopefully that's going to be enough to push them back into the term market and get contracting back to where it should be.
Okay, so you raise a very good point, and I just want to summarize a couple of things for our viewers. But in 2023, 160 million pounds were contracted, and as you mentioned, a big chunk of that came from one contract. And in 2024, it was 110 million pounds. Here we are halfway through 2025, and you just mentioned we're only at 25 million pounds. Why? Why is it so low?
I think a lot of it comes down to the point I made around uncertainty, which was, US utilities in particular, they didn't know whether there would be a rapprochement between the US and Russia, and whether they could therefore go and contract with Rosatom again. And I think that, uncertainty plays a role, but I also think that there is a certain naivety among fuel buyers. I mean, had a recent conversation with one of the old fuel buyers at Exelon, who sort of said that utilities don't really worry about fuel, and that derives from a 10-year market where utilities could just dip in and out of the spot or the term market and pick up their pounds. Now, I just don't see a situation where the supply demand fundamentals of this trade are going to get better in favor of the utilities. So I'm just very surprised to see term volumes reported where they are. I don't know if those volumes capture every trade in the market. I doubt that they do. But regardless of whether they're missing a bit or not, it is surprisingly low volumes, considering, as I mentioned, we've got 31 countries wanting to triple or quadruple nuclear capacity by 2050. You had the recent US administration coming out talking about wanting to spend $75 billion on Westinghouse reactors. So everything's pointing in one direction. And, I'm sure that some investors are bored of hearing about the sort of pressure cooker analogy, but that's exactly how we view it. At some point, something has to give, and these utilities are going to have to come to the term market. And if history is anything to go by, they tend to come all at once and together, and that's what can create these sort of high convexity moments in pricing.
And do you think the volumes are going to pick up in the back half of the year, like maybe after the World Nuclear Symposium in September?
Do I think what is, sorry?
Do you think the volumes will pick up in the term market after the World Nuclear Symposium in September?
Yeah, I mean, they normally do, but then recently we have the WNFC, the World Nuclear Fuel Cycles Conference down in Sydney, and I thought that would probably be a catalyst to see some of these utilities come back to market. And we saw 10 million pounds there or thereabouts contracted last month, which was, considering pretty much £0 had been contracted in the 3 months prior, something had happened. But summer tends to be a bit of a quieter period, but WNA in September usually provides pretty strong catalysts for the sector. But, I am very much of the view that looking at historic data and looking at the way the historic volumes have traded, it's kind of losing its relevance a little bit. I'm just very much of the view that utilities have over £3 billion of uncontracted demand to get through by 2040. And at some point, that's going to have to occur. And I look at the supply side of this trade, and I see Kazakhstan as sort of the 800-pound gorilla in the room, 40% of global supply, not being able to significantly increase production in the years ahead. Similarly, in Canada, and really the market's priced to perfection that next-gen Denison, Fission, Paladin, all of these miners are going to be coming online on time and on budget, and that's just not how uranium mining works. As particularly the US producers have shown, we saw Peninsula, for example, cancel 3 contracts amounting to £2 million. That has to be met somewhere else, right? And they're going to have to come into the spot market and buy. And ultimately, that means that a utility falls short. So, the pressure cooker analogy, perhaps people are bored of hearing it, but it remains as true today as it has for the last year or so.
So we touched on the long-term market. What about the spot market? Any thoughts there, and where do you see the price going into year end?
Yeah, I mean, the obvious news to talk about is the Sprott, the recent Sprott raise, $200 million upsized from 100. They're now sitting on $230 million of cash to go and buy in the spot market. That's about £3 million at today's prices. Some of the producers who are not meeting their production targets being forced into the spot market to come and buy pounds. And then you also have potentially utilities looking at short-term calls on for uranium. So you kind of have 4 or 5 players, and that doesn't even talk about the hedge funds. We estimate that 40 hedge funds or more have got storage accounts in the West, and they could be looking to join this sort of, I guess, frenzy in uranium markets when the time is right. So spot market volumes, I would expect to see quite strong comparatively over the summer period, and ultimately see an upward pressure on prices. We saw prices head up from sort of 69 to 75, 76 after the Sprott news, and then today at about 75. So we have an end of year price target of more than $90, and I think that we could get there quite quickly if we see these 4, I guess, sort of participants all come to the market at the same time.
I'm sorry, how many hedge funds did you say have the ability to buy physical?
So we estimate, investment funds have got around 40 of them have got physical storage accounts with the NRC, with the nuclear regulator in the US.
Wow. So that could be significant buying power right there.
Yeah, 100%. But, the path of least resistance for a fund wanting to get involved in physical uranium is to buy the Sprott Physical Uranium Trust or buy Yellow Cake. Setting up these storage accounts can take time, but maybe these guys have been positioning themselves for the past year ahead of a larger move. So, we'll see. We'll see how many in the next few months, hopefully.
So you're bullish on uranium, as I am, but why don't we take the other side of this trade and look at it from a negative point of view? Like if we go into year end, what are the biggest negatives or biggest risks to this trade as we go into year end?
Well, I think that, fueled by a stubbornness could just maintain until a point there, in 12 months' time, we're still sat here having the same conversation. The difficulty here is that you need to have a really accurate gauge on global inventories in order for you to understand the exact supply demand picture. And we think we have a pretty good understanding of that. But whether the stalemate continues between producers and utilities throughout the rest of this year, and ultimately we don't see prices move. I think also, wider macro risks, we've seen the impact that, trade tariff uncertainty has had on broader equity markets throughout this year. Also geopolitical risk between the likes of Iran and Israel, which, at this moment in time is obviously at quite a heightened risk, especially with, Israel targeting some of the nuclear facilities in Iran. That's not particularly good headline news, but, for the nuclear industry as a whole. And ultimately, one of the things that we always talk about as one of the key risks is a radiation leak or a nuclear meltdown of sorts. So, these are black swan events, both things that investors, should probably be aware of, and as potential risks, to this trade. But I think on the demand side for uranium, it's as robust as I've seen it in the past 6 years and growing at a rate of knots. And I think particularly in the US, when we talk about deregulation, there is no industry in the world that needs deregulation more than nuclear. There is a way to build nuclear power plants safely, but on time, and not have a 3 to 4 year lead time just for permitting and approval. So, when we talk about risks to this trade, it's the fact that mine supply could be permitted and licensed faster than we're able to build out new nuclear capacity. That's something that we think about and that we model internally as well.
Yeah, all very good points. And I think the other thing we should really focus on too is the fact that the US consumes 45 million pounds a year and they produce very little, like what, maybe 1 million pounds, 2 million pounds a year. So they are at risk to, securing this product.
Yeah, I mean, the US produced about 500,000 pounds last year, so they're producing less than 1% their domestic requirements, there or thereabouts. And as I mentioned, Peninsula have had their own production problems. UEC are coming into production now. And Encore, again, have, spoken openly about some of the issues that they've had in production. Ultimately, the US, we've spoken about this before, they didn't produce uranium for 3 decades. They became so reliant on Russian downblended uranium that they didn't need to mine, they didn't need to do conversion, they didn't need to do enrichment or fabrication. They became so, I guess, addicted to cheap Russian uranium. But I think that there has to be a premium paid for not just US, but North American jurisdiction uranium, provenance uranium. That's why Cameco, in my opinion, is just, one of those must-own names. It's got that sort of well-rounded balance of uranium and wider nuclear. But ultimately, this premium for Western provenance pounds is something that we've spoken about for a long time. And actually, at points this year, we saw pounds stored in the West traded at $2 or $3 premium to pounds stored at Orano in France, for example. So it's, when we talk about who we want to align ourselves to and our investors to, it's always got to be these high quality North American aligned or North American provenance uranium assets, high quality management teams, strong geological teams. And I think that's where investors are going to have real gear into rising prices.
Yes, all very good points. Well, Ben, I want to thank you very much for spending time with us today and sharing your thoughts. If somebody would like to learn more about you and your firm, Ocean Wall, where can they go?
So oceanwall.com is our website, /reports. We publish a lot of our thematic reports online for free. We also have a Substack called The Hoot, and you can find us on Twitter at oceanwall2.
Ben, once again, thank you.
Thanks, Jimmy. No problem.
Did you know that every time you hit the subscribe button, your name goes into a draw to win $1 million? I'm just kidding. But if you do subscribe, it really helps us build our channel. Thank you for subscribing, and thanks for your support. Colin, thank you very much for joining us today. How are things in Vancouver?
Really, really nice. Thank you very much for having me.
So Premier American Uranium is a new company for me, so I'm looking forward to learning more about it. And Premier is focused on acquiring uranium assets in the US and more specifically, exploration and development assets. Now, I'm curious why you're focusing on that aspect and why not something more closer to production.
Well, I think primarily it has to do with, I mean, there's a scale to acquisition, and as we grow this company through our acquire, explore, develop strategy, at some stage we intend to be larger and capable of making acquisitions, let's say up the chain. But primarily what makes the acquire, explore, develop model work is our ability to go and find things at an earlier stage, spend some money, develop them, and expose the value that way. So it's kind of two-pronged. I mean, we're not at the scale yet where most acquisition of more advanced companies would be very, very expensive, but also because we have a belief that we can expose value and extract value by finding earlier stage things, leveraging our technical team, and generating value for shareholders that way.
And in line with this strategy, you recently announced the acquisition of nuclear fuels. Why don't you tell us a little bit about this company and what was the rationale for doing so?
Well, it's a really important company for us. It was one of the primary targets within our pipeline. It has a really very, very interesting large project in Wyoming in the Powder River Basin, our Cyclone project in the Great Divide Basin. We've been successful drilling it. We really like Wyoming as a jurisdiction. There's 3 other projects in Wyoming besides the flagship KC project within nuclear fuels. Overall, it more than doubles our footprint in Wyoming. It has an exploration target on the KC project of 11.5 to 30 million pounds, backed by a 43-101 technical report. So our Cyclone project has a 8 to 12.5 million pound resource exploration target. So on the low end, you're increasing our exploration target in Wyoming by 150%, on the high end 250%. So just a really, really good way of increasing our footprint in a very attractive state. And we love the positioning of the project. It's not far from 2 existing producers that are ramping up, and we think that that's going to be very, very strategic a couple of years down the road.
And Colin, can you tell us how was the deal funded?
It's an all-share transaction. It's 0.33 PUR shares for each nuclear fuel share. The resulting company is going to have a market cap based on current pricing of over $100 million, substantial, really well financed. But it all share transaction, no cash in the deal, which is the most efficient way for us to go out and make acquisition.
And when is the expected closing of the deal?
Expected to close in Q3, probably close to late August.
And once the deal closes, how will the shareholder base look?
Well, one of the strongest things about PUR and nuclear fuels is the shareholder base. I mean, PUR was spun out of Consolidated Uranium just prior to acquisition by ISO Energy. And so we've got ISO Energy at 10%, but very, very interesting and attractive to me as a former analyst leaving to join this company back in March of 2024 was Sachem Cove's positioning, which is a, a, one of the most prevalent uranium investment funds in the US. They own 36% of our stock almost. And the co-founder, obviously co-founded by Mike Alkin, who runs the investment fund, and Tim Rotolo. Tim Rotolo continues to be the chairman of our board. So extremely strong platform between ISO Energy, Mega Uranium, Sachem Cove, and Encore being a major shareholder of nuclear fuels will continue to own about 10% of the pro forma company, which is really, really important to us. They're a shareholder of us already. So I don't think you'll find as strong of a shareholder register in any exploration-focused company in the uranium sector.
Yes, those are the right shareholders to have. Now, once the deal closes, how many assets will you own and how many states will you be located in?
There'll be 12 assets in the portfolio in total in 5 historically productive uranium states, with a focus in, with the bulk of that in Wyoming and New Mexico, which are 2 of the largest producing states in U.S. history.
Colin, as you mentioned, many of the assets are in the state of Wyoming. And can you speak to this jurisdiction and how is the state and how are the local governments toward mining?
Wyoming being one of the most prolific historic producers in the U.S. 250 million pounds of historic production coming out of Wyoming. Wyoming's one of 3 agreement states in the U.S. that has uranium processing facilities within its agreement with the federal government. So what that means is that permitting of uranium projects in Wyoming happens almost entirely at the state level. That's been a big advantage for existing operators in Wyoming. We've seen in the last kind of decade and a half, we've seen multiple new projects receive permits, get built, go into production. So Wyoming, in my opinion, extremely favorable state for uranium for uranium asset exploration and development.
And at one time, the state of Wyoming was one of the top uranium jurisdictions in the world, but it no longer is. Why?
I think uranium price had a lot to do with that. I mean, historic production in the modern era, historic production, we saw certain ISR operations by some major producers, thinking of Smith Ranch Highland from Cameco, among and some of the neo producers that kind of turned on production in kind of in and around Fukushima. That had an extremely strong impact on uranium price, as we know. And we saw the price drop, and we saw a lot of those assets transition to care and maintenance. And we're slowly starting to see the revival of those assets with multiple operations in the state, either in the process of turning production back on or with a plan to. So I think that Wyoming will be one of the first and states and a leader in uranium production for the United States. But certainly uranium price and low-cost sources external to the U.S. Had a lot to do with the demise of uranium production in Wyoming.
So one of your primary properties there is Cyclone, and last year you and your team initiated a drilling campaign of 46 holes. Maybe you can just speak to this and what were the results?
We had that was the inaugural drill program for the Cyclone project. We have two main targets on the Cyclone project. One's called Cyclone Rim, the other's called Osborne Draw. We drilled 41 holes for almost 21,000 feet at the Cyclone Rim target. We were successful in establishing a half-mile trend of uranium mineralized holes that met the cutoff and GT cutoff grades for potential inclusion in a future resource. So extremely successful there. After completing 41 holes at the rim target, we moved over to the Osborne Draw target, drilled 5 holes, 4 of which were mineralized. Two of them, two pairs, were over a mile apart, and both had uranium mineralization in them. So we were really excited to see those results, and we were very encouraged by the results we got at the bigger portion of the drilling over at Cyclone Rim. So in July of this year, just a few weeks away, we'll go back to Cyclone Rim and start drilling in the areas where we had a lot of success. Moving that process of working to delineate a resource there, moving that along.
And how many rigs do you plan on having and how many meters?
That'll be a single rig program at the Cyclone project. It'll be about 25,000 feet. Probably about 21,000 feet, depending. That is kind of the continuation of the drilling that we started last year. It was all under the same permit. So based on the results of that program, we'll work at Cyclone to increase the drilling intensity in future programs. But it'll be about 21,000 feet, and we're going to be targeting the areas where we saw the best results last year. So I'm hopeful and confident that we're going to have something to show for that.
And do you only drill in the summer or can you drill in the winter also?
The drilling window for us at Cyclone Rim is July to usually seasonally constrained by mid to late October. That's in the Great Divide Basin. That's kind of our window. Where in the Powder River Basin, where Nuclear Fuels KC project is, they've already begun drilling, so they can start drilling a little bit earlier than us up there, and they've got 100,000-foot initial component already underway for their drill program. So one of the things that we liked about the acquisition is that it increases kind of the calendar spread where we can generate news flow from our key projects. So it creates a more newsy company in addition to the scale that we add with that acquisition.
So let's move on now and talk about New Mexico. And your most advanced project there is Ciboletta. Did I pronounce that right?
Yep, it's definitely pronounced a few different ways from a few different people, but Ciboletta is very good.
And it has a resource of 23.5 million pounds, and you're working toward an updated resource. When can we expect the results, and will they be significantly larger?
Yeah, I mean, just to add to what you said, the 23.5 million pound resources are indicated plus inferred. 80% of that's in the indicated category. The plan for this summer is to update that resource and alongside produce a preliminary economic assessment for that project. It's probably 6 weeks away. We're dealing with the very last parts of refining that model, interacting with the independent qualified person to just refine the portions of that. So we're excited to be in a position to deliver that in the not too distant future. The main component or source for the resource upgrade is it's really been a desktop exercise. When we published the 23.5 million pound combined resource back in June of last year, there was a significant amount of data on the project that hadn't yet been digitized, and it wasn't in a condition that could be modeled. So we've since done that desktop exercise and digitized that data, handed it over to the QP so that they could model it. So that's where we're looking to get an incremental increase in the resource from.
And once you receive the new resource in the PEA, what are the next steps?
Well, then, once we have preliminary economics in hand, the next steps will be certainly we have a drill permit that we received. So we have 2 existing Part 3 drill permits for New Mexico that allow us to do some additional drilling. Some of that drilling is going to be focused on kind of where we see the low-hanging fruit in terms of resource extension and expansion. But some of that drilling will also be dedicated to some targeted core drilling. Once you get preliminary economics, you have to start kind of backfilling that and de-risking it with confirmatory metallurgical holes. So we'll be collecting core to carry out some test work that we think is going to be augmentative to the project and necessary to refine the assumptions within the PEA. So a mix of technical and resource extension drilling is likely. The timing of that could be later in 2025, could be 2026. It really depends on a little bit on the market and how aggressive or conservative we want to be with our cash resources.
And I'm glad you brought that up. How much cash do you have?
On a combined basis, on a pro forma basis, the nuclear fuels and Premier have about $12 million. Based on our last stated balance sheets, I think in our presentation you see about 14 combined. There's been a bit of spending since then, but very, very healthy balance sheet with the combined companies.
And you mentioned that the nuclear fuels deal will close sometime in Q3. Once this deal is closed, can we expect further acquisitions at some point in the future?
It's definitely going to continue to be a focus for us. We're looking to build, but being careful. Our last acquisition closed in June of 2024. It's been about a year, and we're looking to close another one. But I think, our mandate or our strategy, acquire, explore, develop, we still want to be extremely careful about what we're acquiring, what we're paying. We want to make sure that we're acquiring things that complement our existing portfolio, like nuclear fuels does. We can leverage a lot of internal resources around permitting, data analysis, many things that make it the right acquisition. And we'll continue to be careful and look for things that really augment our existing portfolio or that we think are so transformative that they can stand alone and add great value by doing some work on our part.
Colin, you have a unique background in that before you became the CEO of Premier, you were a research analyst and focused on the uranium sector and other mining sectors. So you know the sector very well. And I'm curious to hear your thoughts on how you would characterize this current cycle that we're in compared to previous ones.
Yeah, I mean, I'm as a publishing analyst, there's definitely a lot of quotes that you could pull about what I've said about the market, and it really hasn't changed since I left that seat a year ago. I think that this is by far the best fundamental picture that we've seen in my career and possibly in many decades for uranium. I mean, I still think that we're fundamentally undersupplied based on consumption being buffered by inventory and secondary supplies in some cases, but at no point at many points in the past, demand was fairly static and supply would slow down and price would go up and there'd be a supply response and that would quickly correct uranium price bumps. But in this scenario where you've got 31 countries trying to triple nuclear capacity by 2050, you've got the US going even further than that, trying to add 10 reactors by the end of, or have 10 reactors under construction by the end of the decade, actually trying to add 300 gigawatts of nuclear capacity to the existing 100 by 2050. I mean, the biggest civil nuclear fleets in the world are looking at pretty dramatic expansion. So what you've got this time is a supply deficit that needs to be corrected by higher prices, incentivizing new production. But on top of that, you've got an accelerating demand that most models aren't even accounting for the potential of SMRs to augment everything that I just said. So what the reason I think it's different this time is because we have a supply issue that needs to be solved with higher prices, but we've got accelerating demand as well. And those two things haven't really happened at the same time in my career. So very exciting time, I think, for me.
Colin, as we wrap up, you have a portfolio of early stage assets, and a big part of your job will be moving these projects forward and de-risking them and in the process unlocking value. Maybe you can just summarize for us how you're going to do that in the coming months and what sort of news flow investors can expect also from Premier.
Yeah, from a news flow perspective, I mean, we're drilling on a combined basis, we're drilling over 150,000 feet this year um, planned. So it's going to be very, very newsy from the Wyoming projects. We're going to be delivering a resource update and a PEA from our New Mexico project. So um, that really takes us from now to the end of the year in terms of new project level news. And when you add in the potential acquisition piece, we had a quite positive response to this acquisition announcement from the market. I think we can find other things that are going to be equally exciting. And I think when you ask how do we accomplish that, one of the most important things about this transaction is the increase in scale of the company overall. The larger we get, the easier it will be to execute the strategy and make acquisitions. So as we get bigger, I think we can accelerate the acquisition piece, and as we get bigger, we'll be able to put more money into the projects and generate more news flow. All of that kind of being the total execution of our strategy as a way to create value for shareholders.
Well, Colin, I want to thank you very much for spending time with us today and sharing your views on what's happening with Premier. Once again, thank you.
My pleasure. We're excited to deliver for the shareholders and for the platform. So thank you very much.
Justin, thank you very much for joining us today. How are things in California?
It's my pleasure again, Jimmy. Things are going well. No complaints.
So I want to start our conversation discussing the executive orders that were issued by the U.S. government. And the orders focused on three things: expediting development, expanding capacity, and accelerating the permitting process. And anyone who's involved in the mining process knows the permitting is the thing that kills everything. It takes, just in Canada, you're looking at 10 plus years to get a mine permitted. But I want to get your views on some of the orders that were put forth by the government. And one of the executive orders was to upgrade 5 existing reactors and to start the construction of 10 nuclear reactors by the end of the decade. How feasible do you think this is? Or is it just a pipe dream?
So when you mentioned upgrading, I believe that it was actually 5 gigawatts of uprates is what was part of the executive order, in addition to the 10 reactors, 10 large reactors under construction by 2030. So the uprates kind of have already been happening. So this executive order was sort of in line with a trend that's been happening anyways. Depending on the type of uprate that's done, it may or may not equal larger demand for uranium. Oftentimes there's upgrades to certain moving parts within the reactor, upgrading the steam turbines, potentially using, if an uprate involves using higher enriched uranium, that can equal more demand. But that was sort of already in line with kind of what's already happening here, is the utilities are responding to a robust and improving electricity market that they're expecting to be able to service into and make a lot of money from. So they're doing what they can to expand capacity of their existing fleet. The 10 large reactors under construction by 2030 honestly sort of felt a little bit like wishful thinking. The wishful thinking element is the question, if that's going to happen or not. It's looking, as the months have passed, increasingly less likely that there will be near-term peace, unfortunately, or that there will be any sort of opening back up of just quote-unquote free trade between Russia and the United States. There actually is legislation going through Congress right now that is proposing a 500% tariff on any country that does business with energy products with Russia. And this is probably unlikely to happen, but it's basically a negotiating tool or a tool of leverage to try to force Putin's hand to some kind of agreement, is the reasoning for that legislation. But it is there, and it has the potential to pass, but that's overhanging as well. That's not adding any certainty, especially for US utilities. And then lastly, I would say that at these prices, there's very little uranium on offer in the long-term market. There's only a couple of developers that have been offering fixed price or base escalated prices around $80 a pound escalated. And my understanding is those developers that have been selling at that price range are done. They don't have anything else to offer at that price. But if you can buy a little bit in a carry trade, you can buy a little bit in spot, you can do small volume contracting with developers that are offering the prices in this range. That's what you're going to do during this period of enormous uncertainty for utilities. uncertainties will eventually clear. And in order for more volume to be secured in the term market, we're going to need to see higher prices because the offer in higher volume for the period that utilities need to cover, which is late 20s, early 30s and beyond, is only coming from the legacy reliable producers. And they want 75, 80 floors, 130 ceilings, 100% reference to the market. Utilities don't want to sign those contracts, but they're going to have to. So once they start doing that, we're going to see the term volumes significantly rise. And of course, the price will rise because that is what is for sale. There's not much more uranium for sale for delivery 28 and beyond at $80. There just isn't. So that is one big reason why the volumes aren't there. There's not much for sale at these prices. Once we see the price move, the volumes will move, and vice versa. It'll be a little bit of a flywheel in that way. And that's what we're expecting next. Doesn't mean it's going to happen tomorrow or next week, but we will see higher volumes of term contracting for sure. Following WNA in September, big conference that the whole nuclear world attends. Usually have a fuel conference in the fall as well. New budgets for a lot of utilities in October 1. It's all going to come together, I think, later this year into the early part of next year. And then, for years to come, really, we need to see approaching and potentially beyond replacement rate contracting, inventory restocking. Most utilities are uncovered. That is to say, the majority of the utilities are uncovered starting in 2031. And that period of time is exactly when we have significant supply shortfalls really start to hit.
And when you look at utilities, when you compare them to, let's say, Americans, Europeans, and Asians, who has the most coverage now? Who has the most inventory? And I guess
inventory, yeah. Go ahead.
Of those three parties, who would be the most, I guess, holding back the most?
I would say that the U.S. utilities seem to be, and this is a vast generalization because there's a couple of utilities, and it's two of the larger ones in particular that have very, very sharp fuel buyers who have been largely ahead of the curve and much more aligned with investor projections or taking investor projections more seriously, if not having their own supply and demand modeling. And that's to speak of you can count on 2 or 3 fingers the number of fuel buyers that are actually doing that level of in-depth work on projecting price. Because of that, they've been able to procure at good prices and cover their own utilities needs significantly better than many of the others who tend to be more kind of trend following. So the U.S. utilities, besides those few, seem to be a little bit more stubborn, but part of that also is U.S. specific uncertainties, especially around Russia. And there's kind of this sentiment that why are they so stubborn in terms of desperation for Russian supply? And I would look at it a little bit differently in that for these people's entire careers, Russia has been a wonderful supplier of all things fuel cycle. You can pick up the phone and make one call and get everything across the entire fuel chain at the best price in the industry. It's easy, they always deliver, and it's competitively priced. And so that has a lot of momentum. And these exogenous events like the war in Ukraine and the US policy response to that is something that's unique, and it's happening in this moment in time, and it's not something that's easily pivoted away from. So there's a big adjustment that they have to make. It's a very, very big adjustment for U.S. utilities and utilities in general, but especially in the U.S. because of the policies, to change the way that they procure, let's say. That's a big shift, and it's not something that's easily done. And it has, despite the fact that uranium is, 5 or 6 or 7% of their overall operating budget, which is minimal, we're still talking about multi-$100 million decisions to procure fuel. I mean, if you're talking about a couple million pounds of delivery per year of U3O8, for example, for a 5-year period, that's hundreds of millions of dollar decision that you have to make. It matters to their bottom line. And to say that it doesn't matter is a ridiculous statement. Yes, they will pay much higher prices because they have to. They can't not fuel their reactor. That is 100% true. But to say that price doesn't matter is utterly wrong. So it's a complicated environment. And for that reason, they have been less willing to step up to the long-term contracting table in large volumes with legacy producers requiring higher prices What they've done instead is buy a little bit of Chinese EUP, and the Chinese don't sell enrichment. They only sell enrichment that they've purchased. So they've been buying Russian enrichment and selling their own enrichment to the US and to the EU. So they've been buying a little bit of that. They've accelerated Russian deliveries in the past 2 years. They've been nibbling in the spot market. They've been engaging in some smaller volume carry trades. They've just been pulling every single possible little lever to maintain that roughly 2-year inventory without having to come to the table and bite the bullet. That's the piece that's going to come next. So I would say utilities in the US are the least covered. The Japanese and the Koreans are right around similar coverage levels to speak. Generally, they're less covered. The EU is usually always better covered with typically 3+ years of inventory. The biggest inventory holders is China. They've got, as of last year's reporting, had 600 million pounds of inventory. It's probably a little bit more at this point. With all of that said, Chinese nuclear reactors are expected to consume 1 billion pounds of uranium in the next 15 years. So that really kind of puts that inventory in perspective, especially when you consider China has very little domestic uranium in the ground and uranium production on an annual basis. They're building out other elements of the fuel cycle, but they are still out there buying uranium, shoring up projects globally. We're going to see further Chinese acquisitions and joint ventures as the months and years progress. They're net buyers for the foreseeable future, despite that large inventory.
The way you describe it, it sounds like the U.S. utilities have a strategy of hope. Like they're hoping things get resolved between Ukraine and Russia.
I think, yes and no. It really comes back to if you're a fuel buyer and you've been in this industry for 20 or 30 years, you've never had a period of time where you've been unable to procure uranium. It has literally never happened. And because of that, there's a lot of doubt about projections coming from even from the price reporters and the analysts, but especially the investors who are projecting significantly higher prices. There's a lot of doubt around that. And evidence of that will come through the price reporter. So UXC does semi-annual surveys with utilities. We have access to their material. And over the years, as we've been reading their material, these surveys that come out, like every single time that they poll utility customers and their primary clientele, UXC's primary clientele is utilities. When they poll them and they say, where will the spot price be 1 year from now? Where will the spot price be 5 years from now? And for the last 5 years, despite the fact that the price of uranium have tripled, they always believe that it's going to be in a reasonable range between where it is right now. They just think higher prices will bring enough supply out of the ground. And over a long enough time frame, they're probably right. The problem is that supply is extremely slow to respond to price, which is why you almost always have, historically speaking, very, very big moves in price. And then you have equally as big bear markets in uranium as the commodity. So I wouldn't say that they have a strategy of hope. I think that's a little bit of a generalization. I think, like I mentioned, there absolutely are very, very sharp fuel buyers who are ahead of the curve here. But to quote Mike Alkin, I think that the statement that they typically move kind of as a herd is usually true. And what we'll usually see is either a big utility comes in with a chunky RFP or they sign a big volume contract. That's a signal to the other medium and smaller utilities that it's time to get into action. Or they actually move in trend with price. So when price starts to rise and does so consistently, they will actually step back into the market. Because if they want buy when the price is rising, even if it's a short-term rise and it settles back down, they can't really be blamed for that, right? But if you try to stick your neck out and pick the bottom and it drops another $5 or another $10 a pound, that doesn't look very good. And you're risking your job by doing that as a fuel buyer. So fuel buyers will generally move in trend. When the price is down, they stay out. When the price is up, they step back in. When big utilities sign big contracts, they tend to move together. And that's something we haven't really seen since 23. In 23, we saw big contracts signed by the Chinese and a handful of other utilities followed suit. And of course, we saw a 40% move up in the term price. Now, where's the term price at here? $80 a pound. Both price reporters are $80 a pound. It's been within a $2 trading range for 12 months, actually pushing 13 months here. And what we've seen in the past 5 years is range bound for 8 to 12 months, big move up for the next 8 to 12 months. Rinse and repeat. We've seen that 5 or 6 times in the last 5 years. So what comes next is the move up. I can't tell you if it happens next week or 3 months from now, but that is what happens next. I would be very surprised if we didn't see the term price start to tick up right now, knowing that those developers selling at lower prices are done with having something on offer at these prices.
Okay, so let's talk about big tech, because this is a massive theme here in the past year. And data center demand is currently consuming 3% of total energy in the US. It's estimated this number is going to triple within the next 5 years. Both Microsoft and Meta have signed 20-year power purchase agreements with Constellation. So it's obvious big tech is very aggressive and very confident with nuclear energy. And I want to get your views on how this compares with what we saw with battery metals and also the OEMs. So General Motors, for example, they invested $650 million. They made an equity investment in Lithium Americas, which has a large lithium mine in the state of Nevada. And they took down a 38% stake in Lithium Americas. Volkswagen did the same thing in a small exploration company called Patriot Battery Metals, which is in northern Quebec. Just a bunch of, there's nothing there at all. It's just a bunch of rocks out in the middle of nowhere. But do you see the same thing happening here? Like, could you envision somebody like a Microsoft or like Meta investing in a development company, or maybe it's Duke or Constellation, the same way GM did in Lithium Americas?
Duke, actually, the Constellation, there was the Constellation exec at the last conference I attended in New York back in February, who was actually directly asked this question. And this person's answer was essentially that they don't have an interest in investing directly in the projects. They're going to support the miners through long-term contracts. So I would be surprised if the utilities got directly involved in projects. As far as the tech companies go, we're seeing increasing direct involvement, and especially in terms of just putting money to work. So we just saw yesterday that the venture capital arm of NVIDIA invested $650 million in TerraPower. TerraPower is building one of the first 2 SMRs of the 2 demonstration projects in the US. TerraPower is Natrium and X Energy's XE100. And the Natrium reactor in Wyoming is under construction right now. So for NVIDIA to take a stake in that financing, I think is pretty significant. We continue to hear that multiple tech companies have basically been kicking the tires and kind of sniffing around the fuel cycle. I think that concern is actually real. If they're going to be directly investing in electricity generation via nuclear, they're going to want to make sure that the fuel is going to be there to power those facilities. So that's a very logical thought process there. And I think it's highly likely to pan out. When, I don't know. For sure, I don't know. I don't have a crystal ball on this, but all the signs are there that the tech involvement and interest in this sector is absolutely real. The other direct involvement I think is very interesting is the RFP that was put out for the VC Summer plant in South Carolina that is partially constructed, and that construction was halted when Westinghouse went bankrupt during the Vogtle construction process. And this RFP was basically put out saying, hey, is there anybody interested in either partially owning this plant, investing in the restart, basically just putting feelers out, the owner of the plant, to see what kind of interest is there. And I think they had 90 or 100 responses. And of those responses, they said that about half of them were financially viable. That is to say, have sufficient balance sheets to actually, restart construction or take ownership or part ownership of this plant. Amongst those were the big 7, the tech companies. So the tech companies directly took an interest in this RFP and said, yeah, we are interested in buying this, obviously to restart construction and eventually have it operating. So we're just in such early stages for this trend of tech company involvement in the nuclear industry, and how exactly or when they get involved, or if, I suppose, still in the fuel cycle, remains to be seen. But I think it's a decent speculation that it does happen at some point.
Okay, so let's talk about stocks now. I want to get your opinion on what's happening here with equities. And, as we just discussed, there's many tailwinds, okay? Like there's no other, I cover all the resources, oil and gas, gold and silver, base metals. No other sector has as much positives associated with it than nuclear energy and uranium. But we're not really seeing the stocks come through at all. Like Cameco's up 25 or 30% on the year, which is great, trading at or near all-time highs. Kazatomprom, it's only up 10% on the year, so there's a lot of geopolitical issues there. But then when you go down, you look at the developers, you look at the Explorcos, they're doing nothing. And yet a lot of these infrastructure stocks, maybe they're more speculative, but names like OKLO or Oklo, it's up 200% on the year. Lightbridge is up 160% on the year. NewScale is up over 100% on the year. Why do you think we're seeing such a discrepancy with these stocks that I just mentioned versus the miners?
Because the spot price of uranium is essentially flat for the year. So if we go back to early January, the spot price was mid 70s. And what we're talking about is mining stocks that are selling, will potentially sell one day a commodity, and the price of that commodity is paramount to the movement of these stocks. And so when you have positive drivers for the nuclear industry, while that is extremely positive for the stability and growth of demand for that commodity, it doesn't necessarily equal immediate movement of the commodity, especially in the nuclear industry that essentially lives in the future. So all of this news that is surrounding the growth of nuclear is more immediately supportive of the nuclear stocks, the picks and shovels, the actual SMR builders, et cetera, et cetera. With all of that said, a third of the stocks in this space have become memes and aren't really driven by any sort of reasonable value metric. So if you go and you search the tickers of any, like 3 or 4 of the tickers that you actually mentioned on a day when the stock is up 10, 15, 20%, it's just hundreds, if not thousands of Wall Street bets types pumping. And that's meme action. It isn't driven by fundamentals. And in fact, the 3 primary SMR companies that are publicly traded have very, very few projects in the pipeline, if any. I think Oklo has one small one with the Department of Defense. NewScale has one in Romania, and Nano doesn't have any at all. And of course, in some cases, maybe they're trading almost like Tesla, where you're not really trading or buying that stock because of the present cash flows or the automobile sales quarter over quarter. You're buying it because the guy is sending rockets into space and providing internet to the globe. And where and what will be accomplished by this company 10 years from now, like, I don't think anybody knows. So it's possible that the market is pricing in the potential for a huge, huge revolution in building small modular reactors, and that's certainly there. But the follow-on move that comes from this de-risking and growth of demand due to these nuclear policies that will affect the uranium price, that hasn't happened yet. So to say that the stocks are underperforming nuclear, absolutely. And the reason is, year to date, the price hasn't really moved. Term or spot. So we went down, we came back up, and the fact that some of these are even positive on the year is actually probably a very, very positive sign, considering the gut punch that happened late Q1 into early Q2, and the fact that the price hasn't done anything year to date. When it does, that's when we'll see the significant performance and likely outperformance of the uranium equities. These are ultimately mining stocks, and the thing that they will sell one day or are selling now, the price of that has to move higher in order to actually get any gauge of improved, let's say, forward cash flow analyses of these companies. You have to be able to price in 90 and then 100 and then 110. And that's going to happen. So it takes a lot of patience. You don't have to put all your eggs in the uranium basket. Having some diversification into the nuclear sector, I think, is very, very smart. It's something we've suggested for a very long time. But the uranium's time will come. It isn't there yet because we haven't had that pull on in price, and largely has to do with everything I already mentioned, the response to the big move last year, the uncertainties, et cetera. But that's coming. So in many ways, it's a contrarian bet here still.
And that's a very good point, because I speak to a lot of North American investors and follow a lot of people online, and I get the sense that there's still a lot of frustration out there and people are still very skeptical. And I guess I'm one too, because I'm a big investor in a lot of these names, and I'm frustrated with the lack of performance.
Sure. Yeah. I mean, I think that this market will give you a lot of opportunities to trade, and that's something that we've been putting more focus on, for sure, in order to take advantage of that volatility in this market. But yeah, it is a patience testing trade. That is 100% true. For us, watching what is happening in the physical market and modeling out the sector gives us enormous confidence for the runway ahead of us. And has it taken longer than anyone expected? 1,000% it has. And we've had some good runs. We've had some painful pullbacks, but everything that we can see from a fundamental basis, especially modeling out the sector, looks better than we could have ever expected for the growth of nuclear and therefore demand for uranium. And until and unless supply responds sufficient to satisfy the future demands of nuclear reactors, we're going to see the price continue to move higher. And that's what we're placing a bet on.
Yeah, and I think investors have to realize the markets can be irrational for a long period of time. I had a discussion with an economist earlier, and we were just talking about everything that's happening in this crazy world right now. We still have war in Ukraine and war in the Middle East, and it looks like it might escalate. We have so much uncertainty within the global economy because of the potential for trade wars. And yet here we have the S&P at 6,000, right? And yet every company I follow, every company I watch, that especially after Q1 numbers, all you ever saw were profit warnings. People were taking their guidance down for the year because of what was happening in the global picture, right? And all the airlines have slashed their guidance because people are not flying. And yet here the S&P is trading at or near all-time highs. It makes no sense, but that's the way it is. And so it sounds to me like you're giving the same message about investing in uranium.
Yeah, I mean, nobody knows exactly how this is going to play out for the equities. I mean, any commodity investment, besides doing individual analysis on the companies, which we do, you're making a bet on the overall trajectory of the commodity. And that's essentially what we're doing here. How exactly the flows will come in or out of this sector. I mean, one example of that is just the way that these things have traded this year so far, with an exception of the past couple of months, which has been incredibly positive. But the first few months of the year, I mean, what we found out a few weeks back was that JP Morgan has been absolutely dumping shares of URA. I mean, URA has had 16 million shares in redemptions since early April, since April 1. And 2/3 of that has come from JP Morgan. And so whether or not that was on behalf of their clientele as a prime broker, or if that was actually their own managed money, we don't know. But that has been a huge contributor to the redemptions coming from URA. Yet all of these stocks are up 50 to 80, 90% in the last 10 weeks, despite the fact that URA has had probably pushing 250 million in direct selling pressure on the uranium names alone during the past 10 weeks. And that's just a wrinkle in the markets. It has nothing to do with the price movement of the commodity, and nobody could have expected that. And you have excessive shorting in the sector. You still do, even though a lot of those have covered, at least on the Canadian and US exchanges. They're still trying to short the heck out of the uranium stocks in the ASX for whatever reason. But, you had these pod shops in New York City that were their best idea 2 months ago was to short uranium. And if you ask them why, they say, because Sprott's going to have to sell. And at the time, they were about to come into the market with 50,000 pounds to put some cash in their bank account, and it wouldn't have done anything to the spot price, nothing at all. But that was their narrative, after doing 35 seconds of due diligence. So, and this is the smart money. Okay, so JP Morgan dumped URA right before it made another 50% move above where they sold it. And so, how smart is that smart money? That's the question. And you can't predict those sort of things. You have to stay aligned with where is the commodity going. And of course, you can trade in and out and move with or without the sector, like individually make your own investing decisions. Like nobody's forcing anybody to do anything here. This is a bet on the trajectory of the commodity, and where the markets will go in the short term is anybody's guess.
Well, let's hope we have a bullish second half. And I want to thank you very much for spending time with us today, Justin, and sharing your thoughts on what's happening. If anybody would like to follow you online or read some of your research, where can they go?
uraniuminsider.com. And it's always a pleasure to meet with you, Jimmy. Appreciate it.
Once again, thank you. Did you know we're now on Spotify and Apple Podcasts? So now you can listen to us on Spotify or Apple and listen and learn when you're stuck in traffic on the 401 in Toronto, the I-95 in New York, or the I-5 in LA. So be sure to subscribe and follow us on Spotify and Apple Podcasts. John, thank you very much for joining us today. How are things in Casper, Wyoming?
Oh, it's great in Casper. It's a beautiful spring day. Excited about the production ramp up and what's going on in the market.
So, as you mentioned, a lot has changed at Your Energy since the last time we spoke. There's been a lot of progression, and many people might not know this, but Your Energy is one of the largest uranium producers in the US, and I want to do a deep dive on your assets. You have two primary assets, Lost Creek and also Shirley Basin, and Lost Creek is the most advanced of the two. So I want to begin our discussion right here. It is producing, but you are in the ramp up stage. Can you give us an overview of how that ramp up is going?
Yeah, ramp up continues to move in the right direction. We're increasing production, increasing flow. Head grade has been very, very good in the second quarter, so we're really excited about that. One of our recent header houses has come on really nice. So people listening in have heard me talk a lot about manpower. We have our entire team now at Lost Creek, getting them trained, building in efficiencies. So that ramp up is continuing to move in the right direction.
And when you do get to full capacity, what will be the annual production at Lost Creek?
So our license at Lost Creek for the mine portion allows us to produce up to 1.2 million pounds per year. That would be at 100% efficiency. So we're not likely to get quite there, but we would love to be around 1.1, maybe even a little bit over 1.1 million pounds per year from the mine once we get to full production. The mill, we're allowed to do up to 2.2 million pounds a year, which would allow us to bring in product from either a competitor or from one of the other operations that we have designs on.
And so you have a permit or a license to produce 1.2 million pounds a year. Are you able to increase that, especially given that your mill is able to do 2.2 million pounds a year?
Yeah, we can. Certainly would require some additional licensing. That would not be too burdensome. Probably the greater challenge here is we have to respect the technology, especially the what Mother Nature can handle on wastewater disposal and the hydrology. So that would be our constraint. But can we grow that production profile if we chose to do so? Yeah, we can absolutely do that. We've got the team, we've got the plant to be able to manage it. We would just need to go through that permitting and handle the wastewater management, but we can do that.
And what are the resources at Lost Creek and also the grades?
Yeah, absolutely. So we've got a great deposit there with about a 13-year life expectancy going from today. The resource there, we've got about 12.7 million pounds of measured and indicated. The grades are lower, but it's an in situ mine, so that has less of an impact. Grade there is around 0.048, but when you look at our grade coming out of the ground, it's been very high, and so that's a nice offsetting factor. In addition to that M&I pounds, we've also got a little over 6 million pounds of inferred resource. And one of the great things about Lost Creek that I really like to talk about, and it's really highlighted in our technical report, is we have a room to explore. We have over 35,000 contiguous acres there in the basin that a lot of it has not been explored. We know that there are oxidation reduction roll fronts that terminate without any drilling on the ends. And we would love to be chasing that this year. And in fact, this year we've put a little bit of money aside in our budget to chase some of those, try to grow the resource, try to find new roll fronts. So lots of opportunity there for exploration at Lost Creek to grow that resource.
And John, you mentioned that at Lost Creek, you mine via ISR or in situ mining, and there's many benefits associated with this type of mining. Maybe you can just tell us what some of those benefits are.
Yeah, broadly speaking, the benefits are environmental and economic. I'll start with the environmental. We don't need tailings. We don't leave behind an open pit or spoils piles, anything like that. All we do is install water wells, and when we're done, we restore the groundwater. We take out the wellheads in the buildings. Within a few years, the ground will be completely reclaimed, and it can be used for unrestricted use. So it can be used for anything. So right now in our mine units, if you go out there, you're going to see grass, you're going to see antelope, you're going to see wildlife using the mine itself. There's very little activity. And in fact, the in situ mine, the mine portion itself, in the off shift hours, we operate with one person in the mine. Just one is all it takes. So the environmental footprint there is very small. The carbon footprint is also very small. On the financial side, on the economic side, because you don't have to remove the overburden, because you don't have to go underground, you don't have tailings, any of that to deal with. and a very small workforce, very low capital entry point. It just helps to make it very cost effective. We're mining here in the U.S. some very low grade deposits using in situ mining, and we can compete, especially from our Lost Creek and our Shirley Basin deposits. We can compete on the global scale. So in situ mining, if you look at the cost curve around the world, generally speaking, the lower 50% of the cost, almost exclusively in situ mines. And if you look at the upper 50% of the cost curve, almost exclusively conventional mines. So we're happy to be deploying that technology here at Lost Creek and eventually at Shirley Basin.
So having said all that, John, what is the operating cost and what is also the all-in sustaining cost at Lost Creek?
Yeah, so operating cost at Lost Creek, if you take a look at our tech report that we've got filed, we're looking at $16, $17 a pound operating cost. If you look at the all-in cost for Lost Creek as we get ramped up, it's important to say that, and we start getting over that million-pound a year run rate, we're looking at cost of around $45 a pound or a little bit north of that. So to put that into context, the spot market is around $70 a pound. Long-term market's been around $80 a pound. So we're well in the money compared to where the market is right now.
So excellent margins. Now,
Yes.
You mentioned you're still in the ramp up stage. Has there been any issues during ramp up?
Yeah, I mean, we've been very transparent about that. People, that's been our biggest challenge. Fortunately, that's largely behind us now. But just getting people at a remote mine site has not been easy. And then so many people left the uranium mining industry in the U.S. when the market was depressed for so many years that the industry really atrophied. So it was a challenge not only to get experienced people for UR Energy, for our company employees, but also some of the contractors that we use, like the drillers. They had drill rigs, they could deploy rigs, but they had no one to work on the rigs. So it's taken a while for that supply demand to come back into balance. It finally has. Rigs are much more available now. Rigs are calling us, not us calling the rigs. So we're in a much better place there. But that's been by far and away the biggest challenge for ramp up in Wyoming for ourselves and for a number of our peers.
And John, I want to provide a bit of a visual for our viewers, but you're based in Casper. And how far are you from Lost Creek and how far are you from Shirley Basin?
Yeah, so Lost Creek is almost directly behind me. It's about a 2-hour drive here from Casper. The nearest town to Lost Creek would be Rawlins, Wyoming. It's a population of about 9,000 people, and that's a 1-hour drive. So Lost Creek is fairly remote. It's in the middle of the desert, really no communities of any size around it. Shirley Basin would be off to my right, to the southeast of Casper. It's a 1-hour drive, paved almost all the way. So as we look to be bringing staff on at Shirley Basin, we believe it's going to be remarkably easier. We've already hired about 12 people, mostly professionals. They're working out there today. We're drilling, working on construction. So we think it's going to be much easier to bring that staff on for Shirley Basin.
Just because it's so close to Casper?
So close. And it's close to a much bigger population center than Lost Creek is. Casper, we've got a population of pushing 60,000 people. The Shirley Basin mine is a well-known mine. It's right off of a heavily traveled highway that's paved. And so people know us there. They see the signs, and they've had a lot of family members that have worked at that project over the years. It's very common when I'm around town and I talk to people and they learn I work for UR Energy in Shirley Basin. They say, hey, my dad worked there. My uncle worked there. I even know a couple of people that grew up in the company town out there back in the 60s and 70s. So it's a very well-known project.
So let's talk about Shirley Basin in a little more detail now. As you mentioned, it was a producer at one time, but it's not now. You're actually under the construction phase right now. Why don't you give us an update on where you are in construction and when will you start producing?
Yeah, so construction is going well. We've had a great spring going into summer here, so we're right on target with construction, excuse me. So that's going quite well. And we've got the compaction done on the soil for the satellite building. We'll be starting to pour concrete on that in the coming weeks. And we're targeting being done with construction by the fall of this year, going into winter of this year. We will have to go through a pre-operations inspection with the state of Wyoming. That will likely take a few weeks. So when we talk about when are we going to start up production, probably be very early, 2026 is what we're targeting. one of the benefits to that project is there's so much infrastructure already there. There were already some roads, there were already some buildings and power lines. We've done upgrades on all of that, though that is all complete. We've got the monitor wells installed for Mine Unit 1. We're sampling those. We've been doing piloting for the first header house. In fact, piloting on the first header house is done now. We're moving on to well installation. And it's also very heavily drilled. Most of the resource there is in the measured category, over 8 million pounds. And so we don't have to do delineation drilling or exploration drilling there because it's so well defined. We can go straight into production drilling. So that's going really well. Penetration rates on the drill rigs is very high. A single well can pilot 3, maybe up to 4 wells per day because it's shallow and good digging. So it's a great project. We're really excited to be there. And it's worth noting that that's really where in situ technology was invented. Starting back in 1961, they came up with the concept, and by April of 63, they had deployed in situ mining at that project, and it was very successful. So we're excited to bring in situ mining back to its birthplace here early next year.
And you mentioned the resource is 8 million pounds?
That's correct. And the grade is really good there. It's much higher than at Lost Creek. And so we're excited to be bringing that into production. We're around a little over 0.2%, a 0.25% grade. And so great project, shallow, well-defined, buildings are there. We'll operate it as a satellite facility. So we're building ion exchange columns here in town through a contractor. That process is well underway. They've been sending us pictures of the completed columns. And so we'll collect the uranium from Shirley Basin on that resin, and then we'll simply truck it over to Lost Creek for processing. It's about a 110-mile drive. And that way we don't have to build out the back end of the plant at Shirley Basin. That'll save us quite a bit of capital. And the capital expenditure at Shirley, we're looking at around $41 million all in. We've already expended quite a good chunk of that. And so we'll keep moving forward. We're well funded to complete that work.
So just to clarify, the excess capacity that you have at the mill at Lost Creek, you're going to use the pounds from Shirley Basin to feed that.
That is correct. Yeah, that's right. We'll load the resin on trucks, ship it over to Lost Creek, do an elution on the resin, and then the barren resin we simply take back over to Shirley Basin, recycle it over and over and over again so we don't have to buy new resin.
And can you also touch on what the operating costs will be and the all-in sustaining cost at Shirley Basin?
Yeah, so Shirley Basin, the cost will be slightly more than at Lost Creek. So we're looking at operating costs a little bit north of $17, $18 a pound. We do have a technical report that's available on that. That's linked on our website. But the all-in cost for that project, or some people may refer to it as break even, will be right around the $50 range for that project.
And just to summarize, when up and running in full production, Lost Creek will produce 1.2 million pounds a year, and Shirley Basin will be producing 1 million.
Yeah, those are the license limitations for us. We can expand that if we desire to do so, but that's what our license allows us to do. And I should mention as well, both projects are fully permitted. We're not lacking any permits. We're ready to rock and roll.
And right now, of course, you're focused on construction and eventually production at Shirley Basin, but what's the land package like? At some point in the future, do you also plan exploring there like you will at Lost Creek?
Yeah, we do have some opportunity to explore, not directly within the land package at Shirley Basin, but we do have claims surrounding it that are not contiguous, but they're within pipeline distance. And so we would love to do some exploration there. We're trying to figure out right now if we want to do that exploration this year or if we want to push that off, trying to figure out what our priorities will be. Likely the priorities for this calendar year will be around LC East, out by Lost Creek, North Hatzel, and Lost Soldier. Those are 3 of our exploration and hopefully moving into development stage on at least one of those.
John, let's move on now and discuss your balance sheet because you do have 2 projects on the go and there's a lot happening at both and they're going to require a lot of funding. How much cash do you have on hand and how will you allocate that in the coming year?
Yeah, so at last report, we had 66 million in cash, no financial debt. So we've got a very strong cash position that we believe is going to see us through this year. In addition to that cash position, we've got some great revenues coming in this year. We'll be selling about 440,000 pounds. That's going to give us around $27 million in revenue this year to add to that capital that we have in place right now. I did mention that our big expenditure this year will be at Shirley Basin. Again, $41 million or so to build that out. We're on budget. We're on target. We remain on target. In fact, I had a discussion with our chief operating officer yesterday. We're getting ready to let one of our major contracts that's remaining on that, and it's on budget. Just comes in right on target of what we expected it to be. We have a couple of more major contracts to let on that, but so far that is all looking good. But that's really where we're going to be dedicating our money to this year is the build out at Shirley Basin, continuing that ramp up at Lost Creek, get to those economies of scale this year.
You touched on some of your contractual obligations. Maybe you can just expand on that. How many contracts do you have, and are they with U.S. utilities or European?
Yeah, so we've got a number of contracts in place right now. The total contract book is a little over, let's see, gotta look at my numbers here. We're 7 contracts total. A couple of them are with European entities. We are not able to disclose names. 5 of them are with U.S. utilities. We have been able to talk about one of those, Constellation, who had some fantastic news that they've signed a major contract to supply electricity for the next 20 years to an AI database system. And so we're excited to be a part of that story. We're continuing to look for opportunities to contract, but we believe pretty firmly that the price of uranium is going to continue to go higher. And so pumping the brakes just a little bit, we'll continue to look for good opportunities. But between utility demand, really being pushed by carbon-free desires for that type of energy, and big data, small modular reactors, all of that's going on in the background. And then you also look at the demand that's coming from the U.S. government, Project Pele, HALEU, LEU projects that have been funded, and the government will be buying domestic material for those is the preference. We're just pumping the brakes. We think there's some good opportunity to sell some more pounds there.
And John, you already provided a lot of detail on your 2 assets, but maybe you can just provide a summary for us as to what shareholders and investors should look forward to in the coming months in terms of catalysts.
Yeah, so the catalyst going forward, we expect to have good news on ramp up at Lost Creek. I think all eyes are on us in that regard. So we'd love to get that put out in the press. We'd like to have some good news there. That should be a great catalyst for us. That's our number 1 objective, is successful ramp up at Lost Creek. And then beyond that, building out Shirley Basin, getting it ramped up, doing it on budget, doing it on time. Those are 2 great catalysts for us. We're also doing exploration this year, so we hope to have some good news on growth of resource and also maybe discovery of some additional roll fronts, additional deposits. We're in a target-rich environment. Every time we've gone out and explored, in particular at Lost Creek, we've been very successful. So it is a forward-looking statement, but we believe we've got some great opportunity there. And beyond that, I think as you look at the market, beyond UR Energy, but there are catalysts in the market. As we look at global supply demand fundamentals, the miners simply are not keeping up with demand. And we believe that's going to continue to put pressure on the uranium price. We don't pay too much attention to the spot price. We trade more in the long-term market. That's what we watch. It's at a great price. At $80 a pound, that is a fantastic price for us. But we believe that that's not enough to incentivize enough global production to bring supply and demand into balance. We think it's going to take closer to 90, maybe 95. So we expect in the next 18 months, 2 years, that we're going to see 90, 95. That's what our assessment is, our internal assessment. And so I think that's going to be a great catalyst for UR Energy stock, in addition to the ramp up and the build out of mines.
And John, as we wrap up, investors have many choices in how to invest in uranium and uranium producers and developers, but maybe you can just summarize why they should be looking at UR Energy.
Yeah, we're a proven producer, and there are very few proven producers around the world. We've demonstrated our ability to produce. We've demonstrated very low costs of operation Would encourage investors to go look at our financials back in 2014, 15, 16, 17, and those years had some fantastic years working on the same projects now, bringing them back into production. And we've got the team to be able to do that. So when investors are looking, where do I jump in? Where do I invest in a mining company in the uranium space? It is a very, very small universe. We're one of the very few, and we're operating in a safe jurisdiction with a known project. So we're a known entity. So that helps to de-risk this story. So that's why I think investors should really be looking at us.
Well, John, that was a great overview of your energy, and I want to thank you very much for spending time with us today and sharing the story.
All right. Thank you. Appreciated the opportunity.
Per, thank you very much for joining us today. How are things in Monaco?
Hey Jimmy, great to be on again. It's a little bit on the hot side, but other than that, nothing I can't handle. So it's great to be here and enjoy the summer a little bit.
So every time I speak to you, you're in a different city or a different country. And just in the past month, you were in Australia, China, Japan, and now you're in Monaco. You're like a traveling gypsy.
I am, yeah. My suitcase sees a lot of miles every year. I probably need to buy a new one every year because there's some wear and tear on it. But no, I like traveling around. But now, for the remainder of the summer, I look forward to spending a significant time in Sweden with my mother. So that should be quite fun.
So a lot of your travels has to do with uranium, and this is where I want to focus our discussion today. But before we do that, just for the benefit of viewers who might not know you or might not know your firm, WMC, maybe you can just give a brief overview of WMC and what exactly they do.
Sure, yeah, we're a Dutch commodities merchant. So I started out with nuclear fuel in 2016. There was three Dutch gentlemen that started it. And then in 2019, another ex-chemical colleague and I joined, and we've been quite busy since. So like a couple of years following that, we expanded into battery materials too. So we don't not only trade uranium and nuclear fuel today, we also do lithium, cobalt, manganese, copper, nickel. So anything anything energy transition related is where we want to focus on. So yeah, we've grown quite a bit. We're about 40 people. We have interns now. Lots going on in the Amsterdam office when I stop by there, and also have some recent hires on the nuclear fuel side that we're very happy with over in the US side. So it's no, things are going well. It's good, exciting times.
So that's great. So why don't we move on now and focus on uranium? And this is where you spend all your time, specifically in the spot market. How would you characterize the activity in the uranium spot market year to date?
Yeah, I would say up until very recently, it was almost like a sleeping pill. There was not much going on. There was still, I mean, there's been so much uncertainty where first, especially for US utilities, when first there was talks of Russian sanctions, and then, okay, there's going to be sanctions, and this was previous government. Now there's going to be sanctions, but there's going to be a waiver process. We don't know what that looked like. Then the Russians retaliate with their own ban, and they have a waiver process, which people have no insights into how that's going to work out. Finally, it seems the kinks gets worked out, and then we got a new US government, and then I guess the keyword so far this year is tariffs. So that created an additional and rather large layer of uncertainty for utilities. So they've been really on the sidelines for a long time. And when there's no real term activity or utility activity, it's hard for the spot market to find any direction, especially not when you don't have investors and really engaged either, because they're also on the sidelines. They don't really know what's going to go on with the financial markets overall, not just uranium, but overall global economy. So I would say people have been holding their breath, and they're probably starting to turn blue around now, and we're just waiting for some kind of clarity. But yeah, now there's all sorts of geopolitical issues that might be spreading from not just to Russia and Ukraine. It looks like the Middle East is a little bit of a hotbed now too. So yeah, who knows where this is going? But it's been it certainly has had an impact on the spot market that it's been very quiet overall.
So the word that you mentioned a couple of times was uncertainty, and this is pervasive everywhere we look now in the financial markets. And we especially saw that in Q1 with numerous US companies coming out and reducing guidance, all because of this economic uncertainty due to the trade wars, et cetera. How has this uncertainty impacted the volumes in the spot market? Where do we stand year to date? We're already halfway through the year.
Yeah, I think looking at it like around mid-June, we were about just 25 million pounds. So if you extrapolate that, we were going to get to about 50 million, which is on the lower end. I mean, if you took it 10 years ago, it would be a great year. But then we got spoiled in the early 20s when all the financial interest came into the market and we saw years of 100 million pounds trading. So it's I wouldn't say it's completely quiet, but it's certainly less than it has been at least couple of years ago when there was quite a lot of activity from financial players. And yeah, now we're kind of, again, like I mentioned, it's like people are kind of just holding their breath and waiting to engage a little bit more. But hopefully we'll get there. Starting to see signs of it anyway. But so I would certainly say that the overall uncertainty is clearly having an impact on volumes themselves. Yeah.
So the big news recently was Sprott raising $200 million for the Sprott Physical Uranium Trust. It sounds like it was well received. How do you think this is going to impact the spot market in the near term and when we look further out in the next couple of months?
Yeah, I was funny enough. I was in, or not funny enough. I was in China. I didn't have access to my some of the apps I normally do for work. So all of a sudden, my regular messages start blowing up on my phone, and I didn't realize why. And it was then I got the news from some colleagues that yeah, Sprott raised 200 million pounds. Oh, sorry, $200 million. So that certainly had an impact. And I would say, well, the immediate effect was that the spot market jumped $5. So that would be like 8%. So that clearly had a fairly significant impact. And then it kind of stayed at that level and even crept up a little bit more now. So that it certainly gets people's attention, especially when they've been so quiet that it has been so far. And the not only, like I mentioned, has utilities been on the sidelines, but also the investment community really hasn't been able to engage really either. And then you have something like this, which is by far the single biggest inflow of capital into Spot that we've seen since the beginning. Clearly, it's going to have a big impact. So I would say it certainly jolted things into life. Now, some of the immediate actions are wonderful traders that they're one-trick ponies that they're just gonna buy. As soon as they see Spot has some money, they front run and they buy, and then they turn around and offer it. So we don't really necessarily want to bite on that, but it certainly it adds to the immediate impact of this anyway, and that you will see in the spot price. So it certainly was a jump right away, and then yeah, we'll see where it's going to go next.
And you and your team were very busy as soon as that, or shortly after that deal was announced. And I was surprised in one day you were able to acquire 650,000 pounds, which is a big amount. Maybe you can just speak to that and also speak to what volumes are available in the spot market at this time.
Yeah, I mean, it's when things have been as quiet as they are, they tend to have their cards pretty close to the chest and not say kind of what they want to do. But then, okay, now there is some clarity. Here's a player who has a lot of capital that is looking to invest and buy some pounds. Then people put their cards even closer to the chest, and it's like no one wants to be the first one to sell. So it took a few days to get anywhere, but then yeah, like you mentioned, on the one day we were fairly successful and shored up quite a bit of material. They have a lot more to go, but we're also not in a rush at all to spend any of this. We're certainly just gonna chase something just to inflate it and see it come crashing down again. So yeah, we'll see how we go from here. But it certainly yeah, it got people excited for a bit, and it actually it's good to see a little bit of activity in there. So.
And can you speak to the nature of those sellers that you've seen so far? Are they producers or financials?
Yeah, I would prefer not to mention which types of sellers there are now. Overall, I think I mean we've been mentioned that from time to time that the absolute majority is from intermediaries, so they obviously don't have mines themselves, but through offtakes or inventories or whatever they might have, they sit on some inventories, and those are the ones we tend to get to on short notice because they are basically mobile inventories. From producers, it takes a little bit more time because they might they have clarity a few months ahead, maybe that, oh, we're getting this out of the ground now, we're starting to ship it over to one of the converters, it'll be there 3, 4 months from now. So even though we can agree on buying something with that much notice, we prefer a little bit near-term delivery. So that's what we've been focusing on for now. But we will certainly have discussions with any suppliers too. But I would also say that the list of suppliers that have any material available in the near term is extremely thin. If there is even one single name on there, I doubt that there is. But yeah, well, I'll find out. We'll talk again in a couple of months, and I'll let you know.
And I'm sorry, when you said near term, you prefer delivery in the near term. Can you quantify that?
Yeah, it's I mean, like we prefer to have it in up to 2 months out, maybe. I mean, we can certainly extend it longer, especially if there's an entity with good credit rating and the risk now. If it's a junior, we prefer to see that the pounds should be at the converter facility before we take possession of it. But yeah, it's not a strict rule, but we prefer to keep it as short as possible.
And Per, what about the buy side? Can you speak to what's happening on the buy side? Are there a lot of buyers in the market right now? A lot of utilities?
Spot market wise, yeah, I mean, when we dipped down to low 60s even, which was, I mean, give it a couple of months ago now or a month ago now, then we saw actually quite a few utilities step in and bought fairly meaningful quantities too. And they was purely opportunistic. They're well covered for a few years to come. They're just like, yeah, we wanted to beef up our strategic inventories because we know that this is a good price. And they also knew that with in the low 60s spot price and term price in the 80s, you can certainly make a carry trade work. And they have quite big balance sheets, and they don't have a problem to put stuff on their balance sheets. Then why not do it? So obviously those moves looks pretty good right now. So I congratulate them. I was the first one to do it and say, hey, that's a great move. You should buy as much as you can. And I think the ones that could have. And even though fuel buyers might think, they all probably know that these are very good prices. Not every utility can or want to put that on their balance sheets either because of other restrictions that they might have. So,
And the utilities that have been buying or taking advantage of these lower prices, can you speak to their jurisdiction? Are they Americans, Europeans, Asians?
they're on all over the globe. I would say there's not more one from one specific jurisdiction than others. So it's a fairly good spread on that.
And so let's move on now and talk about the term market. It's also been relatively quiet. Around 25 or 26 million pounds of trade year to date versus 110 million pounds in all of 2024. Maybe you can give us some color on what's happening in the term market. I know you spend most of the time in the spot market, but
yeah. Yeah, no, the difficult thing with the term market is like the spot market is frustrating because it's so opaque. And then you take the term market and it's a few levels more opaque than that because all these contracts are bilaterally negotiated. There's no broker service. You can talk to the price reporters if you want to, but certainly not everything is reported. And some of them could be just an ongoing relationship. You have a 10-year contract that has a couple of years left, it's about to fall off. It's kind of like hockey players, football players, I guess. You just start talking and it's like, if you're going to be an extension, is it's not going to be extension. So the fact that you have a few years left on it, it's like a framework for negotiation. So I've been at Chemical for a long time, and the blend and extend talks that you have, though, they're quite meaningful. And if when you do a large extension like that, it's you don't necessarily report it right away. It might be at the end of the year, or obviously if you have a price level that's been there for a long time, and then you add something more to it, so that the existing price level can have an impact on the newer one. So it doesn't qualify as a brand new price point either. So there is some murkiness in that, which makes it very difficult for price reporters and very difficult for anyone who's going to try to sort of sift through the information and figure something out of it. So it is very, very difficult to say anything that. So that, sure, when you say that 26 million pounds, and if you would told me in January that, oh yeah, by mid-June we're going to be at 26 million pounds, I would just like, that's ridiculous. But knowing what the year has been like so far, and utilities haven't been sitting on their hands, they've been quite a lot of talk of them coming out. So I think there's quite a bit of negotiations going on, and they might just not have been inked yet. And even if they have been inked, they haven't necessarily been reported yet. So I expect that number to come up quite a bit. Where we're going to land, if it's going to be 160 million pounds, that probably not. But as an anecdote, I mean, Cameco's been saying on multiple recent investor conferences that they had their marketing team in China and was speaking to all utilities in China, and they were discussing contract from today up until 2050. So I don't know how big those contracts are. They're obviously going to be quite meaningful. Cameco doesn't even have mines that are going to operate in 2050, but Chinese utilities are willing to contract with an entity that doesn't even have mines. And if Cameco doesn't have mines, very few other entities will. Sure, Olympic Dam is probably going to be around, but it all depends on what copper is doing, what they decide to do with that one. But that gives you a little bit of an idea of the appetite, and I can't imagine that if and when those contracts gets agreed on. I mean, they're clearly not in the 26 million because I mean, one of those contracts can probably be 26 million alone, but we'll just have to see. So there's a lot of uncertainty around that number. So I would caution to people who sort of look at them as the only price point and then try to extrapolate. It's just it's very murky, and you just got to be careful with the garbage in, garbage out stuff. So keep it in mind and look at it. But I would expect it to be fairly fair bit higher than what it is right now, anyway.
Yeah, you raised a few good points there. And one thing I will say about the Chinese, this is why they keep kicking our butts and everything, because they think so long term. Whereas we in the West, we're thinking about this week, next quarter. But the other thing I want to bring up is it sounds like it's what we talked about earlier. There's all this uncertainty. And because of that uncertainty in the financial markets, there's a lot of, I guess, a lack of activity in the term market, and this is why utilities are holding back. Would you agree with that?
It certainly is one aspect, 100%. It's and then whether the uncertainties or the lack of action is, like I mentioned before, like the fuel buyers might want to go out for a long time and say, this is a great time to purchase uranium. Can I please have a budget allocated to or not? But then you're going to get on the radar screen. And if you're a big utility in the US or anywhere else, I mean, it's not going to be on the top of the agenda. It's like, do you need it right now? It's like, well, if you don't need it right now, just hold off because we got tariffs to deal with. We got potential sanctions or no sanctions to deal with. We got global uncertainty to deal with. So there is so many other things that takes the bandwidth of decision makers that you might not get the attention of them that you need. And a lot of the fuel buyers, they would need approval from boards, and then to go out and collect some offers, and then they need another board meeting to get approval to go with one. So it's a 3 to 4 month process. And then and if it's not, like, likely it won't even make the agenda of the board meetings because there's so many other things they have to focus on. So it's that uncertainty, even though it might not spill over directly on the nuclear fuel market itself, it does through that kind of dynamics, if you will.
One other point I just want to clarify, when you talk about bilateral agreements, those are agreements that are done between producers and utilities. And what goes on there, nobody knows. Their NDAs are signed. And so there's no obligation on the part of either party to report anything to the price reporters like UXC or Trade Tech. So therefore, even though the number might be 25 or 30 million pounds, it could be significantly more. We just don't know.
No, for sure. It could definitely be more. And in a lot of cases, I mean, it can be in specific cases where utilities say you cannot report this. Otherwise, I think chemical standard practices that we don't I mean, first, you don't report floors and ceilings. If you have a base price component, you may report that if both parties are okay with it, but there will be on a no-name basis. But in some cases, it might be that you can't even report anything, not even volumes. Otherwise, you can say, okay, we don't report anything on the price, but we can aggregate volumes from a bunch of deals and do it on a 6-month basis or at the end of the year or something like that. So it's even though one of the parties may want to report everything to be fully transparent, it takes two parties, right? And you can't break the confidentiality there.
Okay, so we talked about the spot market. The spot market, is that anything up until 1 year?
It depends. One of the reporters has 3 months and the other has 12 months. So it depends on which entities.
Okay. And then the term market, what's the time frame on anything
Anything
contract?
else? Anything else,
Anything above
essentially.
12 months? Okay, so I want to ask you about RFPs. What's happening in there? Can you speak to any RFPs that are currently out there circulating? And maybe you can speak to the size and the terms.
I would say it's a mixed bag. Some of them are more or less spot, a couple £100,000 here and there, and some of them are 10-year deals with a £500,000 each year. So it's anything in between. And so I would say, and it sort of depends on some of them uranium, some of them are enriched uranium product. But obviously uranium is going to be one of the components, but you also have conversion and enrichment in there. So it really is a mix of everything. And at least I was on a event in Sydney, it's like a side event to the conference, and Triva Klingbeil at TradeTech was speaking, and she in her view, there's quite a number of utilities, both US and non-US, that are on the verge of launching fairly sizable RFPs. So that's yeah, we'll let the summer show what's happening, but certainly towards the end of the summer around the World Nuclear Association Symposium, we tend to see peak in activity right after that anyway.
And can you quantify when you say fairly large RFPs? Like, are we talking £1 million, £5 million?
Again, it's very difficult because it varies in case to case. I think the Koreans, when they come out, they're fairly public in what they do because it's part of their process, and they tend to be between £6 to £8 million total. They haven't been out in the market for quite some time, so I think everybody's expecting them to come out with at least one fairly soon. And then there was a European utility last year that came out for enriched uranium product to like 12, 14 years, and it did a tune of £23 million equivalent. Now that wasn't the right market conditions to launch it in, so they kind of retracted it and did a smaller piece. But at least you know that it's uncovered demand that's going to hit the market at some point, and they're certainly not the only ones.
I'm sorry, how many pounds?
23.
Wow.
Yeah, it was very, very big.
Okay, so let's talk about what's happening with carry trades. And because spot's been trading below the term for quite some time now, a lot of people try to buy in the spot and then sell it in the term at a higher price. Maybe you can just speak to what's happening there and how that is impacting trading activity in both the spot and the term market.
Yeah, earlier in the year, I would say in the first quarter, I think it's like according to UX anyway, I think there was at least £3.5 million that went into these carry trades. And some of them, I mean, then you add the utility purchasing that I mentioned before to that as well on top of it. So there was quite a bit of it. And I think that was definitely what stopped the slide when the spot price was just sliding down further and further. And as soon as you came into the low mid 60s, it definitely stopped. And that was, I would say, single-handedly, that was all carry trades because there was no investors really stepping in. So that you kind of see that that's definitely going to be as long as the term price stays where it is, that is a floor for sure. And then it always depends on financing rates too. But at the current rates, that you can clearly make the case that in the mid 60s, you buy that all day long, and then you can sell it at 80 escalated further a few years out in time. So now we're at mid 70s. That's a different story, but we'll have to see what happens to the term price here in what do we got, a week until the end of the month. So we'll know a little bit more then. But it also depends on how much has been reported. Is there any base price component? Because there can also just be an completely index related. If you're a big supplier right now, I'm not sure that you wanna cap your upside so much, or at least not with the base price itself. We did hear on this side event in Australia that I mentioned a couple of weeks ago that first time I've heard the ceiling 140. Before it's been 130, 135, and now it's a ceiling that was 140. And unfortunately, Cameco is the only one who's transparent enough to mention it, so that's what they get. Now, I would expect them to be able to get the highest ceilings because they are who they are, and they're in a great jurisdiction. But at least you're hearing the numbers are only going up anyway, so that's an indication, if anything.
Can you speak at all to what's happening in the enrichment and conversion markets in terms of pricing?
Yeah, I mean they've held pretty firm, I would say. And there's very small volumes because there's just the spot volumes in general in enrichment and conversion is not very big, and conversion spiked up to 100. It's obviously come down quite a bit since then, but But still, overall, since the invasion of Ukraine now a few years ago, both conversion and enrichment has, 4 or 5 times the price of what it was at the time, because Russia is such a big player in those markets. They're not a big player in uranium. Uranium doubled, you would say at least, but it certainly hasn't been more. So there, a lot of the attention was on conversion and enrichment right away, and it clearly is contracting going on at those levels. We haven't seen it come down at least. And new capacity hasn't been added either. So that's kind of stuck there. I wouldn't say it's a bottleneck that prevents uranium contracting from happening, but it certainly has been more that's where the attention has been, and now it's gonna start to pivot to uranium, because once you buy those components, you obviously need uranium. It doesn't matter how much conversion or enrichment you have, you need uranium to feed into it. So.
Pierre, as we wrap up, I'm going to put you on the spot now. And where do you see the spot price trading at the end of the year? Are we going to be above or below $100 a pound?
Oh, that's a good one. 100 sounds like a lot. I know if I've been asked the question over the last month, it's been like, oh, it'll be below, but it might be around 90. But considering the recent events, yeah, let's just say 100 on the nose is a good one. We'll go with that. It's a little bullish. I totally get that. And gotta be very careful too, because I'm just not like I have any fancy models, and I'm certainly not a financial advisor or any of that stuff either. But considering where the market is, how tight it is, and to see the advent or recurrence of investors in the space, and knowing that utilities are going to come into the market, it certainly has the potential to go to triple digits. I would say so, but if not by the end of the year, then I would say at some point next year, we're certainly going to be there.
Listen, we just saw the price of oil go from 60 to 75 bucks in a relatively short period of time. So anything can happen. This is what makes the financial market so interesting. So we started this conversation off by discussing some of the places you've been to in the last few months. Where are you going this summer? Any big plans?
No, just back to Sweden. I'm gonna enjoy some nice and quiet in the Swedish forest. So I'm looking forward to that. Maybe we'll do a chat from my cabin again. If the market stays interesting, we can check back in August and see what has happened. So
by all means, maybe I'll come to Sweden and we'll do it in person.
We can certainly do that. Go for a little boat ride and chat about uranium.
Per, once again, thank you.
Thank you very much, Jimmy. Anytime.
Dastan, thank you very much for joining us today. How are things in Astana?
Hi, James. All is well, thank you. Always happy to see you. I believe last time we met it was in London during the WNA in 24. Long time no see out there to say, but
that is correct, and that's coming up again very soon. Are you going to be there?
Hopefully, I'll try to make it. If not, a lot of representatives of our company are still going to attend. So there is much to discuss actually, because stepping ahead of our discussion, I guess, a lot of hopes were placed during the last WNA for the contractual activity to pick up, but I don't think the industry lived up to the expectations, the overall approach, I mean.
Well, why don't we jump into it? And I want to begin our conversation with something that's very relevant in today's world, and that is tariffs. And Kazakhstan and Australia supply uranium to the US, and as of right now, there are no specific tariffs on these two countries. However, the US Senate is considering the Sanctioning Russia Act of 2025, which proposes a 500% tariff on Russian origin energy imports, including uranium. And I'm wondering if this will impact any uranium produced with the Russian JVs.
Well, so far we have not been affected, not positively, not negatively, on all the restrictions that were placed with the previous bans that were imposed by the Congress. So I don't expect this to happen. Initially, when they announced that there will be some tariffs, we were able to see that like most of the things we export qualify for exemptions. And I mean, with the US is still the biggest market, and the demand is huge. Some say it's 40 million pounds, some say it's 50 million pounds. I'd say that something in between these figures would be accurate. And how much US managed to produce last year? Million pounds coming from Wyoming, if I'm not mistaken. So for the time being, I don't see any alternatives. Of course, this should not be viewed as like a leverage or something. But all in all, I mean, we've been a reliable supplier for the US utilities for quite a while now, and I hope the situation is not going to change. But then again, our government is in constant talks with our US partners in order to ensure that the security of supply will not be, let's say, damaged or somehow affected.
I want to talk about something else that's very important to your operations, and that is sulfuric acid. It's a key ingredient for ISR mining, and the inability to get the quantities that you need has hampered production. Kazatomprom currently has 2 sulfuric acid plants and is producing or in constructing a 3rd plant to overcome this reliance on other parties or outside parties. What's the status on the construction of this 3rd plant, and when will it start producing sulfuric acid?
Well, we expect for it to go online fully in the first quarter, by the end of the first quarter or in the first quarter of 2027. A relevant announcement was made, I think, a month ago, maybe, or even less, by the Development Bank of Kazakhstan sponsoring this project. So if everything is on track, as we already mentioned, by 2027 or in the beginning of 2027, we're going to be fully covered in-house. So this obstacle would be overcome. I mean, we're going to overcome this obstacle.
And Dastan, what will be the annual output when up and running, and will this 3rd plant meet all of your needs for sulfuric acid?
800,000 tons, the output at full capacity. And once it's fully online, we're going to be almost entirely covered by in-house production.
And in the interim, are you still having issues securing enough sulfuric acid?
Well, it is a very dynamic process, a lot of negotiations, a lot of talks. But so far, we're confident that we'll be able to deliver on our guidance for this year, 26,500 tons. And I need to note that this would be the highest ever coming from Kazakhstan, this quantity.
I want to move on now and discuss one of your big growth projects, and that's Budenovskoye 6 and 7, which is a JV with Rosatom. And the project has had significant setbacks, and as a result, guidance has gone from 4,000 tons in 2025 to 1,300 tons. Can you just touch on some of the reasons why production has been slow or reduced?
Yes, that is an excellent question, actually, and a very popular one, I'd say. One's really interested on what's going with Budenovskoye, and I am actually, it happens that I am the right person to give you a reply on that, since I'm the head of the supervisory board for that joint venture. Well, in essence, for those following closely Kazakhstan, they would know that we are a water scarce country. So a couple of years ago, we had the Minister of Ecology and Environmental Protection divided into 2 separate ministries, and now we have a separate ministry dedicated only for water management. It is called the Ministry of Water Management or Ministry of Water Resources, something like that. But it only deals with water. In order to anticipate the upcoming scarcity of this precious resource, the government started changing all the guidelines and legislation on how actually to use the water. And Kazatomprom, closely following all the principles, all the ESG principles in general, need to comply with all the state legislation and regulations. That's why we had to revise all the project documentation for the entire overground infrastructure in terms of, because like sulfuric acid is used in order to extract uranium from the ground, but you mix it with water, and water is actually involved in a lot of processes within the processing plants and other things. And that's why we had to revise everything and scale down production.
And am I right when I'm saying this year you can expect 1,300 tons in terms of production?
Yes, that's the guidance, and I hope we're going to achieve it. Keeping track on it, like not daily, but I'd say I do it on a monthly basis.
And what is the revised timeline for achieving full capacity of 6,000 tons?
It's going to be after 2027 or in 2027 at least. I mean, the exact date is specified in our investor handout that's available on the website, but it's not going to happen prior to 2027 either way.
And given the production shortfalls, how will Kazatomprom meet its contractual obligations?
Well, we never contract anything beyond that we produce, and the inventory level we have, and year to year, it's usually 10% of the world's production. I mean, and everyone's always interested with the inventory level we have. We use it in order to allow us flexibility in terms of our deliveries and other things. So, but we never oversell. And everyone's always asking whether Kazatomprom is going to go into the market and try to buy something in order to, let's say, fulfill its own obligations or commitments. And so far, this had never happened. At least not on my tenure with the company. But I think it would be safe to say that once Kazatomprom goes into the market in order to purchase something, that's when the deficit actually began. We all talk of the approaching structural deficit, and this is the industry consensus. But so far, we are managing with what we have.
And you touched on this earlier, but I just want to clarify this. The last guidance for the full year of 2025 for Kazatomprom was between 25,000 to 26,500 tons. Is this still on track?
Yes, James, that's absolutely correct, and we're confident that we're going to deliver on these figures, something within this range.
So let's talk about
Please, sorry.
So let's talk about the long-term contracting market now. Can you provide us with any color on what's happening there? How much demand is there? How many players? And maybe you could talk about the jurisdiction.
Yeah, sure. That's an excellent question. Well, I've shifted from the commercial role back in 2024, so I'm not as heavily involved with the clients on a daily basis. But nonetheless, we always keep an eye on the market and what's going on and discussing some strategic things. All in all, I think it is fair to say that the deficit is rapidly approaching is evident to everyone. And I think this actually contradicts with the behavioral patterns of a lot of utilities, especially in the Western Hemisphere. And I'm not trying to, no pun intended towards anyone, but there was a lack of contractual activity, especially in 2024, from the middle of the year. I dare to say high hopes, as I said in the beginning, were placed on WNA for the contractual activity to pick up. Everyone's looking, everyone's really interested, but no one's trying to secure their pounds in the West, whereas the Asian market is booming. And with all these hype going on with the industry, net zero nuclear, and that was in New York in September of 2024. And then there were also high hopes on NEI conference that was held in October 2024. Everyone expects for that to happen. Then there was the US election and everything. And still everyone's really curious, but no one's, when I say no one's, I don't mean like there is lack of contractual activity. Of course, there are certain pounds are being traded and everything, but nonetheless, like for us, people in the industry, knowing the demand, knowing the scarcity of uranium and the way things are unraveling, failure to act on behalf of many of consumers or utilities, I'd say, looks as somewhat irrational. Well, to a certain extent, is going to help us because the prices are going to go up eventually, and then we'll be in a position like, you see, uranium has no substitutions, so the product itself cannot be substituted, and you cannot stop the nuclear power plant. So this gives us very nice perspective in terms of I always call it the bright future. And I think the bright future is approaching the uranium producers very fast as well.
I like this term you used, irrational. When you when you're referring to the utilities. And I want to expand on this a little bit more, but here we are halfway through the year, and the number of pounds contracted in the long-term contracting market is very low, below 20,000 pounds. But how do you explain that? Why do you think there is this reluctance or maybe this lack of interest in being more aggressive in acquiring pounds by the Western utilities?
Well, first of all, I'd like to, so no one gets offended when I say irrational, I'm biased. Everyone needs to understand. As the saying goes, every frog is fond of its own pond. I guess that's the situation with me. But yeah, there are certain reasons I have, and perhaps I'm going to speak them like, when I say this, that's my own personal opinion. I'm not speaking on behalf of the company with regards to that. Bottlenecks in terms of conversion and enrichment. Everyone's just like, if you acquire your pounds, then what do you do with them? There is limited capacity. The conversion and enrichment services are sold out. The utilities are well contracted for these periods as well, for 2026, 27, 28 maybe. It is safe to say. But in terms of the long-term demand and the picture, I think that's what I also am trying to imply, that we're talking about like scarcity right now, but going on further, the scarcity is only going to increase. I like this graph provided by WNA. Actually, it's available. It's also available in our investor handout. I call it the scissors, when you can see that the demand is going to exceed supply to the extent that another Kazatomprom sized entity would be needed. And this is only taking into account the conventional demand, whereas we never know if one day one of the SMR technologies would just going to skyrocket and fly, and then we're going to receive some auxiliary demand as well. All in all, right now, the major driver of demand, I think it is safe to say that coming from China. China actually announced that they're the country with the largest nuclear fleet, because they're not only taking into account the number of units they have, but also they count in the numbers of units under construction and those that have been commissioned or approved. So if we view through this logic, I think they already have 100 plus units, whereas the actual number of units is 56 or 57. So they've surpassed France. And I mean, they're backing their words by action. And they're not, and they have not even joined all these pledges or anything. Whilst everyone's talking, they're just doing, and it's also nice in terms of demand. We're trying to encourage everyone to start acting, because the biggest consumer is next to biggest producer, and we're still trying to keep a certain chunk available for our Western partners and waiting for them to come.
And when you look at this year, 2025, do you envision, I know you can't tell the future, but do you think there's going to be more interest in the back half of the year, maybe after the World Nuclear Symposium in September?
I certainly hope so. And as I've said, a lot of the talks are going constantly. Everyone's talking, I like this joke. I always tell it to the investment community in terms of under different circumstances, but I think it's nice. They say like there is a dog that barks and there is a dog that bites. So this is not the same dog, basically. So we hear a lot of barking, but we don't see no biting. But it should have been the other way around, I guess.
Well, you mentioned earlier that a lot of the contracting is okay, or it's done for the next 3 years. So utilities are okay for 26, 27, 28. Do you envision come the late 2020s and early 2030s? Is that when the real issues are going to kick in terms of demand and also pricing?
Well, I think 28 actually is not, when I mentioned 28, perhaps I was maybe too assured or too optimistic that it's well contracted. 26, 27, yes, everyone's well covered, I guess. But in 28 or after 28, definitely everyone needs to move and everyone needs to act fast. So yes, I expect a great surge in not only like interest, but an actual demand as well. Of course, everyone keeps their own inventory, but they can only carry you this far, So, and I think a lot of inventory has been drained as well already.
Dastan, there's been reports online that the country of Kazakhstan could establish a strategic uranium reserve, perhaps in relation to their plans to build a nuclear power plant. Can you speak to this at all?
Well, so far we have not been involved in no endeavor of such a kind, but perhaps it would be wise to say that this idea may come into life in terms of the security of our own energy supply going on forward, since the nation expressed its will and we're going to join the nuclear club very soon.
Dastan, as we wrap up, what should investors expect in terms of news flow from Kazatomprom in the coming months?
Well, the dividend payout is approaching. Another thing, well, everyone understands the importance of uranium, and I'm always saying that to a certain extent, uranium is being taken for granted, and the situation has to change, and the situation will change, because just as the air we breathe is essential for life, uranium is essential for nuclear power plants to operate. And I think everyone's going to attribute more importance towards this precious commodity. Of course, I'm biased as well, but then again, everyone should understand the importance and significance of that. And Kazakhstan has always been a reliable supplier of that, and we're going to remain committed to our regional diversification in terms of our sales.
And when can we expect the next operations and trading update?
I think it's coming in September or August. I'm not. I need to check. Well, one of these dates.
And is there anything else you would like to communicate to our viewers before we wrap it up?
I would like to express my gratitude towards you, James, for always being with the industry, for actively promoting the importance of the industry, and saying that you're doing a great job, and acknowledge your prominence within the industry.
Well, I appreciate it.
And I wish you the best of luck and the best of success.
Well, once again, I want to thank you very much for spending time with us today, and I hope to see you in London.
Likewise, James. Have a nice day.
Well, that concludes our virtual uranium conference, and I hope you found it useful. If you did not have a chance to hear all the companies or the presenters, you can check it out anytime on our YouTube channel, Bloor Street Capital. We will also have timestamps across all the different companies and presenters, so you can quickly go to a topic or company of interest to make efficient use of your time. If you don't want to watch us, check us out on Spotify and Apple Podcasts. Remember to hit that notification button to be kept up to date on upcoming events. We have some amazing content coming out in the next few weeks. Thank you very much for your support, and good luck in the markets.